Craig, I see the live stream. Confirm that you see it. Sweet. Okay, gonna start audio playback here in 1 minute.
everybody. Welcome to day 2 of Meridian 2020. The theme is global connections to solve real-world challenges. And today we're going to be looking at that theme through the lens of inclusion. How can building more inclusive organizations, networks, and societies change the world? We will delve into how we empower the under and unbanked and those marginalized from our current global systems. We'll also look at how Stellar's anchor model is lighting up access in some of the markets that need it most, creating a more equitable and inclusive financial system. But that's not all we have in store. We've also got performances from our musical entertainment, The Roots, and after breakouts, if you're a gamer, we'll be hosting the Stellar community in a game of marbles on Twitch. If you're more in the Zen spirit, we've got guided meditation and chair yoga to help you close the day with some relaxation. And of course, more opportunities throughout the day to win prizes during the quiz breaks. Now, on to inclusion. We're starting today with a Nobel Prize winner known for her work to ensure women have full financial and political participation. I'll turn it over to my co-host, Lisa Nestor, to introduce this morning's very special guest. Lisa, happy Meridian Day 2.
Thanks, Justin. And yes, happy Meridian Day 2. And good morning, afternoon, or evening to all of you out there, wherever you are. So as Justin mentioned, I am incredibly honored and excited to be introducing our keynote speaker for today. She is the definition of a fearless trailblazer. Ellen Johnson Sirleaf was elected president of Liberia in 2005, making her the first female to hold that position in her country, as well as the first female to be president of a nation on the African continent. During her tenure as president, she was a champion for investments in education and healthcare, as well as for women's full participation in the democratic process and the political system. She also negotiated massive debt forgiveness on behalf of Liberia. And as Justin mentioned, she was awarded the Nobel Peace Prize in 2011 for her work to safeguard women's rights and full participation in peacekeeping work. She is currently the chair of the Economic Community of West African States, among a few other positions. But most importantly, she is an inspiration for so many people around the world today, including myself. It is my absolute pleasure to welcome President Ellen Johnson Sirleaf to Meridian. President Sirleaf, how are you today?
I'm great. Thank you, Lisa, for the introduction. And let me say that just listening to the music and all of that has me excited.
Wonderful.
So I think we're going to have a great exchange in the next 30 minutes or so. I'm looking forward to that.
Well, your energy is certainly contagious, and I hope so. Well, as we mentioned, today's theme is inclusion, and so I'd really love to dive right into that topic with you and get a little bit of your perspective on the role of financial inclusion and empowering economic growth and social well-being in countries. Is it really important? Is financial inclusion something that has a positive impact from your experience?
Well, Lisa, let me start off by saying we are now living in different times. This year, 2020, has exposed the fragilities of the current state of global systems. The IMF has already said that global growth is likely to decline by over 4%. The International Labour Organization has said that we can expect that the global workforce, half of them may lose their jobs and their livelihoods. If we look at what's happening as a result of the lock-in because of COVID-19, millions of young children are out of school. And there's unrest all over the place, starting with the George Floyd and the Black Lives movement in the United States. Mm-hmm. Now, COVID-19 may not have caused these, they've exacerbated it. But there's one thing that's missing in all of this. If we are going to do something about the financial system, we must realize that those excluded are those that have been disadvantaged most. Those are women and youth. And this is why we have this wind of calling for change, calling for justice, for addressing inequities and whatnot. Unless we can bring them in, unless the new financial architecture, global financial architecture, can be able to reach those who have been left behind, we can be assured that we are not going to be prepared for any pandemic, as we have seen West having the most developed health systems have failed because of the inequities, the inequalities that have existed in the world. We do need financial infrastructure. We do need financial intermediation. But how do we ensure that they reach everyone? What can we do to change the architecture so that they can reach everyone? They are essential. We need it for growth. We need it for trade. We need that to make sure that their jobs, but we also need to know that we've got to change the system of access to financial intermediation.
Absolutely. Yes, I would say we're absolutely in line with you in that regard. And at the Stellar Development Foundation, we do see distributed systems, blockchain technology as a way, from the technical vantage point, to be able to reach and serve and provide infrastructure that's capable of including everyone and providing services to everyone. But that said, from my experience, technology is really only half of the equation. You have to actually bring in community members. You have to actually understand their needs and design technologies and solutions that are going to facilitate and foster that type of participation. And I know that's been a huge part of your work and your legacy, with your political campaigns in Liberia, really championing the voice of women and bringing them into that voting process. And then as well as President, developing so many systems and engagements with, maybe traditionally under-included populations. Is there kind of anything that you can share with our community about that process of really connecting with underrepresented, in this case, underbanked communities, and helping their story and their experience be part of the equation in building these solutions?
Lisa, there are a lot of things happening with the young population in the world today. I can only cite some example in Africa. Young technocrats, educated ones, where technology becomes the means by which they can accomplish what they can promote trade. We have young entrepreneurs that are now having cash transfer systems, reaching rural areas where they could not do it before. The marketing of products by women outside of the mainstream, the transfer of money. Those are all the things. The young people are even building platforms by which they can network to each other. So this is changing the whole financial infrastructure. Because while I pointed out that those that denied access have been women and youth, they are now beginning to catch up, particularly the young people. They are creative, they are innovative in using technology to be able to reach, to be able to promote their products, to reach, sometimes just to provide sustenance to family and friends and all the, this is the new part of the wave. I mean, I came from a country that was destroyed by civil war. The entire financial system had been totally disrupted. We had to rebuild our central banking system, first of all, and then the commercial banking system, ensuring the regulations that would create the conducive environment for financial intermediation to take place, to enable us to facilitate trade, to start the process of being able to ensure that we have the means of accessing external sources of financing, whether it's through the multilateral banking system, development finance institutions, getting these transferred, the chain of transfers for money is one that has to be rebuilt. And if you don't do that, then you don't have the means to be able to grow an economy. And if you don't grow the economy, it means that you won't create the jobs. And it means that entrepreneurship, which is the key today when it comes to the young population, if they do not have the means for reaching out to each other, they're not going to be able to keep those businesses. And COVID-19 has already disrupted many of the supply chains, many of the intermediation, many of the flows have been disrupted by COVID-19. This is where the new financial system, the new financial architecture will have to adjust to be broader based, to be more inclusive, to bring in those who have not had access up until now. It's the only way of ensuring sustainability in growth.
Absolutely. And you're already kind of, alluding to this, but I would say, one of the ways we often hear people talking about this migration of the financial system is through the act of moving from kind of a physical cash-based economy to a digital cash-based economy. And so, kind of in your examples, allowing people to be able to kind of transact both locally, but maybe even potentially globally as an entrepreneur, and have more resilience potentially when things like a pandemic or other types of kind of economic shocks occur. So I'm curious to hear, are you seeing, in your travels and kind of within Liberia, migration to digital cash, both for businesses and individuals? And, what do you think that process will take?
We're seeing increasingly a cashless society. There's absolutely no doubt about that. And digital technology will expand how you transfer without having the physical element, of transfers. It's going to be slow in countries where the infrastructure is weak, where the capacity is not strong enough. And this is where we in the least developed countries will have much more of a challenge to be able to upgrade our own systems so that digitization becomes a part of the everyday means of transaction. We're not there yet, but we're moving fast toward that.
Absolutely. And do you see the mobile phone as really a gateway to this cashless society, or are there other important pieces of technological infrastructure that we need to have in place?
Well, I can tell you that mobile phones have transformed countries completely. Even in the most rural areas, you find holders with 2 and 3 phones, having access to 2 or 3 different companies that provide these services. And it is also transforming the way they do trading, the way they do transferring. It's the number of mobile phones in Africa today has exceeded all the projections that have been there. Now, like I say, the building of these platforms, the social network systems, upon which people are now exchanging information, being able to communicate with each other. That's just becoming a part of daily life in every country, and far reaching into places non-accessible in years past. And so the whole thing about inclusion, specifically relates to financial transaction and financial intermediation, is simply the way to go. It's simply how the world is moving in that direction. So your topic of inclusion, I think, is so topical. As one discussed today, how do we get a better world? How do we make it easier to move money, to move people, to move goods? And it's only if you can use digital technology to its utmost.
Absolutely. Yes, we recently had a partner go live on the Stellar network that is connected to mobile money networks and payment systems currently across Tanzania, but expanding to a few other East African countries. And it's very exciting for me to know that those networks will now, through Stellar, be connected to SEPA, to ACH, to other national payment networks, so that we can more easily facilitate value transfer, things like remittances, or even as you mentioned, kind of global trade through these various payment networks. So I couldn't agree with you more there. To switch subjects a little bit, because given your experience in the Ministry of Finance and World Bank and many other large financial institutions, I'm curious to hear if you've been following kind of the developments around central bank digital currencies, and if you have any thoughts on whether this is something that would be valuable for nations, would be valuable for people. Is that something that you've been following at all?
I don't know about digital currency, Lisa. I have my own doubts about that. Because I don't think the record is clear as to whether it has produced the impact, whether it's sustainable. And whether it should be used to replace the normal currencies that we know. I would leave judgment on that. I just don't think that it's going to be able to surpass the traditional means, of monetization. I don't believe in it. I know for countries like my own, where technology is still very low, it's going to be very difficult to introduce that into our financial system.
Absolutely. I think that's a very reasonable perspective. So I have one more question that I'm going to ask for now, and then I would love to invite our viewers to add questions of their own, which I'll be pulling up in just a few minutes. We can ask President Sirleaf and look forward to seeing what those are. So one of the last things that I wanted to ask you about was as well, how you think about not just financial inclusion for individuals in a country like Liberia, but financial inclusion for countries. So, I guess it's a little bit of an abstract question, but, do you think that there's equal access to the global financial infrastructure at a national level? Kind of in your role as president of Liberia, I would assume you've kind of had some good exposure to that. Is it equitable?
No, it's not. No, it's not. And this is why I started off by saying that the global financial architecture must change. The capital outflows to the low-income countries by the development finance institutions, by multilateral institutions, go with conditionality, but cost of capital to many of those institutions so high. Remittances transferred from the global north to the global south go at such a high price. At the same time, financial flows from poor countries, underdeveloped countries to the rich countries, which are the ones that have the custodians of capital, leave the countries from which these resources flow in a state where they cannot sustain themselves. Their financial systems do not grow enough. And this is why today, even when we get the multilateral institutions transferring money, in a short time, the countries can't keep up. We then get into debt servicing problem because they can't keep that. So we will need to change some of those. We will need to make sure that the cost of money is not too high for the poorer countries. One needs to see more capital concentration on a regional basis, on a national basis, so that financial intermediation can expand and thereby provide the basis for sustainable growth.
Yeah, absolutely. I appreciate you sharing that insight and perspective. I had a less experience, but a similar kind of thought that there wasn't quite equitable access on the national level as well. So thank you for that. I have a couple questions here, and it looks like one of our viewers is actually a Liberian, so I'm going to give priority to this one.
Okay.
So Emmanuel says, as a Liberian competing a PhD in computer science, I see the need for this type of technology, meaning blockchain technology, in our country. How can we go about bringing blockchain technology into Liberia to help build it?
I think we need to encourage some of the young entrepreneurs to start a business in that respect. Unless we can get a few of them to take charge of that, to do proposals, to get support for that, to get it started so that people can understand the benefit of blockchain technology. Someone has to start it. So I invite him, our young Liberians who's getting his doctorate, come home, get it started, join the young people, like what happened in East Africa, as Lisa was saying, in Kenya and in Tanzania. They changed the entire system by starting it as young entrepreneurs. And so we just need somebody to get it started.
That's great. I love that. Looking for entrepreneurs to help take some of these new technology innovations to Liberia. So that's fantastic. Okay, I've got another interesting question for you. If we could kind of wave a magic wand and, tomorrow have instant and free payments, either in one of two scenarios. I'm interested to hear what you would prefer. The first scenario being instant free transfers across African countries, so inter-African payments, or instant free transfers between, kind of as you mentioned, the global West or the global North and the global South. What do you think would be, or what would you like to see happen?
I wanted to start with inter-Africa free transfer systems because we're trying to build, we want to have regional cooperation, we want to have regional integration in Africa, We now have the African Continental Free Trade Agreement that's just been ratified by most of our countries. That's supposed to improve trade among our countries. And so you need the system of transfers among ourselves, because that's the only way we can foster trade. And trade in itself will be an enabler for growth. So I say, let's start there, before we can go international, like global south to the global north. I think if we develop our own first through this system, then we enable ourselves to go at a faster pace in trying to sustain our growth.
I think that's a really exciting vision. And some of our fastest growing projects on Stellar are exactly just that. So B2B corporate payments or inter-African remittance payments from South Africa to Nigeria, for example. So hopefully Stellar will be part of building this interoperability and kind of faster payment networks within the continent itself.
But Lisa, I don't want us to forget cost.
Sure.
The cost of capital, the pricing for remittances, the cover of risk in these transfer at high price is what also constrains the growth in intermediation. So I think it's something that, as we talk about changes in our changing world today, as we address inequalities and inequities, we've got to look at the question about the cost of private flows.
Interesting. Yeah, I absolutely agree. I think, the more time I've spent at Stellar, you understand what the real cost of, a cross-border payment is. And, it's not always just moving the money, it's also the risk exposure that you get from holding currency and these types of things. So completely agree. And I'm optimistic that open financial systems can help bring together capital supply and capital demand in ways that help to alleviate some of that risk. But I think we also have a lot to build and continue to grow there.
I agree fully. Fully.
Yeah.
That would mitigate the risk, and that would bring the prices down.
Yeah, no, it's absolutely true. So I think I have time for just one more question, unfortunately, but it's a great one. So the question is, what do you see as being some of the biggest factors to technology adoption? Kind of if we're looking at, various kind of attributes of a country, education, the way the government works, or even like culture. Do you see, either across Africa or even globally, there being certain kind of factors that increase or decrease the likelihood for technology adoption in a country?
I think governance is an important factor. The policies that lead to creating a conducive environment for growth, technology will follow growth and then become an enabler of growth. But you've got to have the environment that is welcoming to technology. And that falls back on national policies. It falls back on national leadership, willing to adopt those measures that enable the confidence of investors, the confidence of those who are going to transfer technology and capital. It has to be there. And I think that's one of the reasons why one keeps talking about unless you get the regulatory environment right, unless good governance means the integrity issues in many of our countries can retard technological growth because of corruption, unless all of those can be addressed by national policies, you will not get the full effect of technology that could change the entire system, that could change the performance of governments, and thereby enable growth to be not only faster, but sustainable.
Absolutely. Well, I think that's a great note to end on. And, governance, I think, is important, both from a national perspective, but as well as part of these open ecosystems. So I think your point that trust really being a kind of key thing to accelerate growth and adoption and investment is well taken. And President Sirleaf, it has been such an honor to share this time with you and to hear your thoughts and perspectives. Thank you so much for joining us at Meridian today.
Thank you, and I'll be paying more attention to Stellar, to blockchain technology, to all that it does to change the world in these changing times. It's been good to be with you, to be with your audience, and to all the young people out there. We just hope you go out there, become a good, strong entrepreneur, and change the world.
So amazing. Thank you so much. We're going to go to break now, and we'll be back with a short quiz. Stay tuned, and thank you all for joining us.
All right, we're back for the first quiz of the day, and it's a Stellar history question. What was Stellar's original native network token called? Options are STR, BTC, or XRP. Remember, the first two people to answer correctly will win a prize. To answer, just click on the quiz buttons on the right-hand side of your screen, and I'll be back shortly with the correct answer and to introduce our next session, Financial Inclusion to Unlock Economic Opportunity. Welcome back. I hope all you Stellar historians got that first quiz question right. The question was, what was Stellar's original native network token called? The answer is STR for Stellars. Stellar originally launched on what is now referred to as the old Stellar network. And when switching to the new, improved, and current network, there was a desire to avoid the confusion between the name of the native token and the name of the network itself. And thus, Lumens were born. It's time for our next session, Financial Inclusion to Unlock Economic Opportunity. We're going to talk about one of the biggest challenges we face today, the inequalities in the financial system that leaves 1.7 billion adults unbanked. This panel is going to explore today's barriers to financial inclusion and get into how these barriers breed distrust in our systems. They'll also talk about how greater inclusion actually stimulates growth and contributes to a stronger, healthier global economy. We've got Ratna Sahay from the IMF and Ronaldo Lemos from SDF's board, and leading the conversation, SDF's Chief Marketing Officer, Jordan Edelstein. Jordan, over to you.
Thanks, Justin. Hi, everyone. Good morning, good afternoon, good evening. I'm going to dive right in, quickly give some background on our panelists. Ratna Sahay is the Deputy Director of Monetary and Capital Markets Department at the IMF. She's joining us today from India. She leads key policy papers in projects in a whole range of areas of monetary policy, including financial inclusion, and one of her specific focuses is financial inclusion as it relates to economic growth. So a bullseye for this panel. She's also taught at Delhi University, Columbia University, and New York University. And also joining us, as Justin mentioned, is Ronaldo Lemos, who is the Chief Scientific Officer at the Institute for Technology and Society in Rio de Janeiro. He's joining us from Brazil today. He co-created Brazil's Internet Bill of Rights law in 2014, as well as Brazil's National IoT Plan in 2018. He's been a visiting scholar at Oxford, Princeton, MIT, a visiting professor at Columbia University, and is actually currently a visiting professor, although virtually, with Schwarzman College in Tsinghua University in Beijing. So thank you both for joining us. I'm going to immediately tap into, it's good you guys had the professorial experience, teaching experience. I'd love to start with sort of a level set on how would you define financial inclusion, and has that sort of evolved over time? Ronaldo, I guess if I could start with you on that one would be great.
Sure. So it's great to be here. And my perspective usually is from the developing world. So as we know, a lot of the developing countries are still struggling to provide financial services for the majority of the population. So that is the case, for instance, of Brazil. And technology can play a very important role for that. And I think one key example we have worldwide is the case of India, which has done a phenomenal work in basically including more than 500 million people in a quite short time span of 7 to 5 years. And one of the ways that India performed so well is because they created a platform called Aadhaar that basically made access to governmental services much easier. It created a digital ID, and basically without having to be physically present in a bank branch or at a governmental place, you could basically use your cell phone in order to get access to a bank account. The question that we have to ask is that enough? So can Brazil follow the same steps? And even even if you include those people, are we sure that they have access to the full possibilities of financial services? And I think this is the question we should ask. And once again, I think that technology can play a role to deal with this issue.
That's great. Radna, what's your perspective on kind of definition of financial inclusion, and has it evolved, and what you're seeing even relative to what Ronaldo mentioned in India?
Thank you, Jordan. And let me just thank you for having me on the panel. It's a real pleasure to be here. So the way we think about financial inclusion is it captures a range of financial services. We are most familiar with the transactions payments aspect, but it also includes savings, credit, of course, and insurance. So the saving and insurance instruments are much less developed, and we have less data on those. But on the payment side and on the credit side, we are able to say a lot more. And these are services which are to be provided both at the individual level, but also at the firm level. what it really means is that households and businesses can have access to very important, useful, and affordable financial products and services, which meets their needs, but it meets their needs in a safe and sustainable manner. And of course, we should not forget that there is a reason why we want to extend financial services to as broad a population as possible, and that is to meet the broader goals of society, to a point you're going to turn, I believe, on economic growth, on improving people's livelihood, reducing poverty, etc. So there is a broader goal to be met. And I should tell you, as a macroeconomist, we were not so focused on financial inclusion until we saw the US subprime crisis, whose goal indeed was to increase financial inclusion, but it wasn't done safely. So that's when we, the IMF, started focusing on this very important topic to meet many macroeconomic goals, apart from growth, also financial stability and inequality.
Yeah. That's so interesting. I don't know if anyone would have pegged that as potentially the catalyst for the IMF, but it makes total sense. Let me follow up with you specifically, Rana, just to start. You mentioned the different aspects and vectors of financial inclusion that exist. Are there sort of some more than others that are more important in terms of driving economic growth, or are all kind of aspects of financial inclusion created equal?
So I will tell you about the study that we did, and the study that we did focused on two aspects, Jordan, which was the payments transaction aspect and the credit aspect. And the reason we could not cover savings and insurance is because, as you know, at the IMF, we have 190 member countries. So we want to collect data from all these countries. And so we couldn't find much data on the savings and insurance aspect. So what we found when we looked at the savings and, sorry, not the savings, the payments and the transaction aspect is that as you increase financial inclusion to wider sections of the society, there is a clear relationship between economic growth and financial inclusion. Very clear. And why does that happen? Because it allows firms to borrow, to invest, contribute to future growth of economies, and it allows households to smooth their consumption patterns, build savings over time, improve their livelihoods. And this is on the insurance aspect. It also helps households and firms to protect themselves from shocks and better manage risks. And for all of these, you need payments transactions. Now, what is really interesting is when it comes to credit, and again, I'll refer to the 2008 financial crisis. Indeed, as you increase credit, it does provide individuals and firms to increase their participation in the economic activity. But if there is no proper supervision and regulation, then too much credit can lead to financial instability. And that financial instability can then hurt growth. So there is a link on some aspects of inclusion and growth, which can be detrimental. But the good news is, and we found this across all the 130 countries that we studied, is countries which had great supervision, high quality supervision and regulation, they were able to increase extending credit to larger and larger proportions of the population. Of course, the returns are lower as you get to the marginal borrower, which is not as creditworthy. But there's a long way to go in the world on that.
Gotcha. Great. Ronaldo, one thing that came up in our previous conversation the three of us had was actually the impact of fintech, and particularly during the time of COVID, and how COVID has impacted development around fintech solutions around financial inclusion. What have you seen that sort of piqued your interest, or where you've seen the needle move even within the last year as the world has dealt with the pandemic?
Sure. So I think this is a key question because take, for instance, the case of Brazil. So Brazil, as everywhere else, entered into an emergency situation in which a very large portion of the population could not work, and then they should receive emergential support on the part of the government in order just to make through these very hard times. Question was, 40 million people in Brazil were invisible to the government, and they didn't have a bank account or any form of like a way to basically receive these payments that basically would allow them to stay at home. And other countries like Kenya, India, Peru, that have worked before in this idea of financial inclusion did so much better than Brazil. And what Brazil had to do was basically to create, in a very rushed way, a sort of an emergential digital account. And of course, it was better to have it than not. And this emergential bank account was basically receiving enrollments from the entire population that was invisible from the government. But as a result, what happened is people did get a digital account, but if you look into the numbers, you didn't really know who was actually receiving the support from the part of the government. So there was a study basically saying that people at the top of the social pyramid in Brazil, people that are wealthy, they were basically being accepted to the platform the same way. So basically it was very much a blind operation in which you basically would accept without much scrutiny everyone. And on top of that, fintechs also played a very important role. So there was this huge debate whether you should give people access to physical food, like basically hand them a package with their basic resources, or whether you should give them money. And once again, the wisest policy, of course, was to give them money and let them decide what they need. And fintechs played a very important role here too. So in a short time span of basically 8 to 9 months, Brazil had to completely reform its access to the financial structure. Question is where do we go from here? So the initial steps have been taken out of necessity, but in my view, and I think I follow very much what Ratna basically just said, financial inclusion is much more than having, an enrollment number in a bank branch somewhere in which you can receive money. You have to think about insurance, credit, and so much more. And I think we are still pretty far away from that.
That's an excellent point. And I think, Ratna, you mentioned earlier there are all the different aspects of financial inclusion and that matter, that contribute to growth. What have you seen in terms of, over the last year, the impact of the pandemic, similar to what Ronaldo was just saying, where you've seen solutions start but not finish, or have you seen instances of success, just in terms of what you've seen across the globe?
Jordan, it's really interesting that we often think of lack of financial inclusion for emerging markets in developing countries. And we don't think of advanced economies. Because in the advanced economies, at least the payment systems are very well developed and most people have access to traditional finance, let's say. Now, with the pandemic, it became really clear that contactless and cashless transactions are at a premium. And this was for everybody. It didn't matter which part of the world you were. And interestingly, it is mostly needed, still is, for the efficient deployment of government support measures. and targeted to a pretty wide section of the population. So what we are finding, and it's very consistent with what Ronaldo is saying, that countries that had gone digital, they tended to do quite well. And by digital, I don't necessarily mean having very sophisticated platforms. I even mean just having, mobiles on which you can receive, and do transactions. So many countries in the African region, sub-Saharan Africa, they were doing quite well. Of course, a lot of Asian countries also, and you see that these two regions on the digital side have actually done much better than some of the other regions. And interestingly, we had conducted interviews across the globe before and after the COVID. And the US, unfortunately, I'm sorry to say, was pretty behind because their whole government platforms were really ancient. They just couldn't take the pressure of so many requests in giving, unemployment insurance or the COVID payout, etc. In fact, just to give you an idea, when we looked at financial inclusion in sub-Saharan Africa, especially, both the traditional and the technology related, in the last few years, there were, I can talk about at least 8 countries where traditional services had fallen, but the digital services had really risen quite rapidly. And these are countries like Botswana, Nigeria, Rwanda, South Africa, Zimbabwe. So when you look at the global picture, fintech to me is a great facilitator of increasing economic opportunities, because right now more than 80% of the adults in the world have access to some form of digital platform, whereas on the traditional side, traditional services, it's only 60%. So I see a lot of great hope and benefit in extending fintech, especially now. And the governments should take it as a top priority to do a number of things, and maybe we can talk about that later, that they need to do to transform their societies.
Well, let's follow up on that point, because I was going to move to barriers, but maybe the better way to frame it is around enablers. I mean, what do you see as the sort of key steps that governments should be taking around sort of setting the right environment, kind of priming the pump for greater financial inclusion?
Jordan, you'd still be right to ask about barriers, and because it's just the flip side of the enablers question. Based on both empirical work that we did and also the interviews, I have to say we are quite concerned about digital and financial literacy, and this cuts across all income levels within a country and across countries. So I do feel that countries like it's a small country, but it's a great country. Singapore has done a phenomenal job in educating its population. It's something you can do on the television. It's something the private sector together with the government can do, and it doesn't take that much time. I work for the IMF, but right now I'm in India, and it's interesting. Ronaldo gave the example of India. To me, it is stunning the kind of services that are being provided. And, I was trying not to go to a particular place by using my credit card because I can't do it as easily online. But they have all kinds of very easy payment mechanisms. So I had to ask my sister, to make some payments because I didn't have the technology on my phone. But anyway, so digital and financial literacy is one, really important. A second one, I would say, is access to really physical infrastructure, which is like making sure there's electricity, the wires, etc. digital one also, like the internet, mobile phones, etc. But very interesting. I also found here in India, you can get mobile phones, smartphones, for less than $15. So I don't know how that happens, but it's available, and people are using it. A third aspect I would mention is, and this is particularly true in the developing world, there has become a shortage of what we call the coders, the guys who actually build these platforms. And so I think that's already in short supply, and I don't know what the governments can do to increase that. And also, I think, in the previous session, the question of building trust with technology came up. And I think that's really important, that the government finds the right regulation and supervision to prevent fraud and to prevent misuse of private data. And let me make the last pitch, because it's a subject very close to my heart. I feel fintech could worsen the gender gap. And I think particular attention is needed to make sure that the women are not left behind.
No, it's a terrific point. Ronaldo, what's your sense in terms of, I think the things Ratna mentioned make intuitive sense in terms of where things that are kind of held back financial inclusion. Are there areas that you see in addition, and maybe in particular, if you could speak to kind of how blockchain could potentially help either overcome those barriers, circumvent them?
Sure. So first, I agree with all the points that Ratna mentioned, connectivity, every and each point. But I would like to add also the problem of the user experience with financial services. So one thing that keeps people away from the banks, and that's certainly the case of Brazil and other developing countries, is that they don't really know how much they will be charged in order to use banking services. So banking fees, they're not clear. You don't know how much you pay. You don't know if you pay for one single transference, which was the case of Brazil and it still is right now. Even if the fees are very small, if you belong in the bottom of the social pyramid, those small fees, they make a lot of difference for you and for your life. So this is one of the barriers that I see. So that's why I think like fintechs are succeeding in building better user experience systems that are easier to use and also clearer in terms of how much you have to pay for those services. And in my view, when you think about the role of the blockchain, it goes the same way. So first, the blockchain can be very efficient, right? So costs for international money transfers, which are very prohibitive. If you are part of a diaspora community in the US, in Europe, or in another country, usually sending money back home or sending money to family members that are in another country, it is something that basically takes a huge portion of your earnings, because you lose in terms of the exchange rate. You don't really know what are the fees that are implied. Sometimes it takes days for the transaction to be completed. And I think the blockchain is a technology that can bring a completely new generation of financial services. So I'm already very excited about the expansion of the so-called DeFi scene, which is basically the decentralized financing and financial services that are being built on top of blockchains. And especially for the developing world, I think the value is very clear. So on top of that, if you also take into account the fact that a lot of local currencies are very unstable, and once again, that is the case of Brazil and other countries in the region like Argentina and others, it's very clear. You don't have really an option to hedge your savings like usually rich people do. and you're basically kept in a situation that you're pretty much helpless in terms of how to protect yourself against currency devaluations and so on. So once again, I think like blockchains, they can make payments cheaper, they can make access to financial services clearer with better user experiences, more accessible with very clear rules. And on top of that, they can also build services that are not available, especially for the most vulnerable portions of a society, especially in the developing countries. So I am personally enthusiastic about these possibilities, and I think we are still in the very beginning of deploying them. So I think they can bring a lot of important new things that are more efficient for populations, especially in the developing world.
Yeah, and as a marketing person myself, I appreciate the focus on the user, and I know some of the businesses and apps that have started building on Stellar, that user experience is something that they're really focused on, because if people can't wake their way through that experience, the utility of the product will inevitably have its limitations. So great. Well, I have a couple of questions I want to throw out to in the last couple minutes. Here's one from Indigo. And Ratna, this speaks to something you mentioned quickly. What role do you see financial education playing in the increased financial inclusion? And could blockchain potentially help with that? So if you could maybe start with the education piece, and we can maybe talk about maybe where blockchain could fit in on
that. Thank you, Jordan, for the question. We are at this moment actually doing a study looking at the different barriers to see which one is more important. But my gut feeling, and I'm going to say that based, of course, on these, what I've seen around the world and what I've read, I really think this combination of digital and financial literacy is probably one of the most important barriers right now, if you really want to accelerate. And the good news is, what we are finding is that, because of the reasons that you mentioned, that all these platforms are becoming much more user-friendly. That's how they're being designed. With this low cost of intermediation, the accessibility, even through just mobile phones, and the flexibility it has. Let me add that, which is you can sit at home in the middle of the night because you're too busy during the day, and you can pay your bills and you can apply for loans. We should not underestimate that. And another factor is greater customization. Very interesting. There are a number of fintech companies around the world. They are small, but they have basically got into a niche market where they understand the local culture, the needs, and they are also actually partnering with their customers to educate them. And I feel that if these small companies can do it, I think the government should really step up in this area. I mean, I was shocked to see that around the world, most countries do not have any financial literacy program in schools at all. Digital, yes, they're doing some of that, but not the other aspect. So the bottom line is, I think either by themselves or in partnership with the private sector, the government should step this up tremendously. It would also educate them how to prevent fraud as a customer, right? So there's many aspects of inclusion that would benefit from financial and digital education.
That's great. Well, as I predicted in our preparation session, I knew that this is a discussion that could continue for an hour, but we are out of time. I want to thank you both for your time and insights on this topic that's so core to why SDF exists and what we're focused on at Stellar. And now let me bring Lisa back up on stage.
Thank you very much.
Thank you.
All right, everyone. I will also thank Jordan, Ratsna, and Ronaldo for that incredible discussion. Financial inclusion is a huge motivator for me, and it's one of the reasons that I joined the Stellar Development Foundation. And I do truly believe that the open financial system that we're all building together is going to make a really big impact on enabling these types of services for the unbanked and underbanked globally. So thank you again for that discussion. And as usual, we would love your feedback. So please share that using the little feedback bar in the top right-hand corner of your screen. And up next, we've got a break where we're going to once again hear from the amazing Grammy Award-winning Roots. So let's go ahead and take the energy level up and hear some more from the Roots.
Wake up, y'all. Everybody. They ask why it seems so solemn. On a throne between 3 stone columns. Y'all know the name, twisting up the game. No condoms. And yo, it's everybody's first world problem. The truth is inconvenient as non-believers. Fearing Dr. Dreamers instead of FEMA. A Bentley, Benz, or a Beamer, Fiji, or Aquafina. We mess around and be the next Iwo Jima. The tides rising at the same time, like they synchronize. For making love, for making art, for making highs. The home is where the hatred lies. They taking lives, yet everybody just so saved and sanctified. Then they rely upon we the few defiant one. Communicating in higher forms than Viacom. To dialogue before the roar of a riot horn. I wonder on which side of the lines I belong. Lady Liberty's face full of concealer. I'm half master killer, half humancer killer. Acrophobia, that's a fear of the healer. Kaepernick is an activist, y'all fear of the kneeler. Listen. I said, get up. Everybody get up. Yeah. Yeah. Everything obtuse, nothing is obscene. Another young life was lost on live stream. Another great fell from grace and high esteem. Then the clock struck 13. We in some kind of dream. First I'm handling first things. Decipher what it means to a planet of earthlings. Where the question remains: am I a journal, a journalist? Herbal eternalist, Olympic tournament level genius, author affirmative. Though turning back and returning, I'm not concerned with it. The permanent ink paved the way out the turbulence. My hands against the wall outside a billion tall. I hear police discussing whether to try and kill us all. I question if that would matter. Life's like a tree that falls in the woods, even with iPhone footage to see it fall. Great men chose the paper-made pen or state pen, the firing pin of a pistol, aimed at a playpen. We go from musket to a missile to a revelation between heaven and Satan. While I'm steady creating, I'm trying to separate the truth from the lies that they told us. I even heard the Soviets, the 45th told us that ain't the photo they showed us, or accepting the onus. Did they watch and told us? My condolence to y'all diplomas. Listen. Hey, yeah. Everybody, get up. I said, get up. Here's the bonus, the point of view to make things see through. If I'm a walking institution, I'm an HBCU. Face the music, keeping it moving's one of the great things we do. Yo, the devil's trying to put together his team, me too. And whether you come from Lagos or Trinidad and Tobago, you can either stay broke or be wealthy as Jeff Bezos if you just stay woke. I was in the dark, then they broke. Directed questions to my ancestors until they spoke now. Inherently rocking a disco currently. Bars is cryptocurrency, hypnotherapy, hitting on everything. 5'9", 6'4", lyrically, crystal clarity. Wonder how I spit so thoroughly. Stay so hungry, rappers can't get no mercy. It's the reason any other one who spit won't burst me. It's so lonely in my own class, formerly known as, is the inscription that your headstone has. On my own path, in my own world like Disney's. Yo, I feel a system failed us like kidneys. Up steps, the one who upsets all carriages. Cause it's imperative we change the narrative. Get up! Everybody get up! Yeah. What my mind says.
All right, welcome back, Meridian. I hope you enjoyed that amazing musical performance as much as I did. So coming up next, we're gonna break out into our first business and technical tracks. On the business track, we have an exciting guest from the US House of Representatives, who also sits on the House Financial Services Committee. On our technical track, welcome to the city. On our technical track, you're in for quite a treat, as Tomer Weller is going to give a brief history of anchor interoperability. But first, I've got a quiz for you. So the question for this quiz is, what is Polaris? And your options are another name for the North Pole, a programming language, or a Django app to set up essential anchor services. Good luck, and we'll be back shortly with the answer. All right. Hey there, Meridian. So if you took our quiz, I've got the answer to what is Polaris. Polaris is a Django app that supports the setup of essential anchor services. Again, anchors are a key part of the Stellar ecosystem. They move value on and off the network, and Stellar is a tool that makes the process of setting up that service that much easier. Well, now it's time for our next session. And the truth is that if we want tech to be the key to inclusion, we need policy makers that help us make that possible. So we've got one here to tell us what the road ahead looks like. Congressman Warren Davidson, the U.S. House Representative from Ohio, and also a member of the House Financial Services Committee, will be joining us next. And our CEO, Danelle Dixon, will be moderating the discussion to get his thoughts on the future of blockchain. So Danelle, I will hand it over to you.
Thank you so much, Lisa. Hello, everyone. And I want to introduce Congressman Warren Davidson. Thank you so much for joining us. You're from the 8th District in Ohio, and I'm so thrilled to have you here.
Thanks, Danelle. Great to see you again and look forward to our discussion.
Yeah, so the last time we saw one another, I think I was at the briefing. It was my first briefing from the House Financial Services Committee. It was the subcommittee. And I recognized during that briefing how awesome it is that we've moved so much forward that we're talking about blockchain. But then I also saw a lot of challenges with respect to many of the members and their thoughts. So we have a lot of work ahead of us, and you have been such an amazing supporter of blockchain and the technology. And I just wanted to hear from you, like, what is it about blockchain that caused you to focus on it and have so much foresight with respect to it?
Well, so the way I, became aware of this really is prior to being a member of Congress, I owned manufacturing companies. So we had a group of companies, and inherently over the past 20 plus years, being involved in manufacturing has meant being, involved in international trade. And so, we had payment challenges, cross-border payment issues, and there's friction with any payment system, but there's a lot of friction with cross-border payment systems, and particularly, you couldn't even easily move money directly into China in the early 2000s. And so we would move money to Hong Kong and then pay between Hong Kong, or some vendors would rather just, in their own case, rather, look, we'll have an account in Hong Kong and you have an account in Hong Kong. We'll just do the money in Hong Kong, but we'll do the business between a plant in China and a plant in the United States. And so, at that time, probably early 2000s, I started seeing things like legacy stuff like DigiCash and stuff like that. So, early on when Bitcoin, launched, I can't say I knew it immediately, but within the first few years, you're like, oh, wow, what an amazing idea. And you look at the principles and how it came to settle down and really be truly decentralized, and no even way to contact Satoshi, and in a system that really still maintains privacy, fit not just with the efficient payment system, but with the principles that America has and has lost in our financial system. Part of the loss of privacy in the United States involves the loss of financial privacy. And inherently that puts people at greater risk for security problems. So you inherently have a different security architecture with blockchain than the traditional architecture. So, there's really not much about the architecture that I like. And a lot of the things that I think we confront as a country can be handled, probably, over half of the problem solved if a company launches and they have true blockchain, true distributed ledger product versus a modified central database.
That's so awesome. I mean, it's so great to go from the real world experience that you had in your businesses and to move it into policy, which is exactly what we want to see happen. One of the things that I noted from that briefing was that I felt like there was a lot of movement to at least want to understand the opportunities with respect to it. And I think some of it is that the industry has for so long talked about the promise of blockchain instead of about the specific use cases that that are actually working today. And so I felt that there was some movement there, but I also, I noted that there seems to be a divide amongst the Republicans and the Democrats in terms of the focal point and what it should be used for and how to do it. So what do you think that we as an industry can do to help you to move things forward, like the Token Taxonomy Act and other momentous pieces of legislation that we could actually help to really stabilize this industry?
Yeah, so good question. And look, in the FinTech Task Force, that was a great thing Maxine Waters set up to kind of deal with, FinTech broadly. But the dividing line isn't really between Republicans and Democrats. There are, people on both sides of the aisle that love the central authority. There's a leading Democratic voice in the issue that literally wants the government to have essentially a super node that can drop a veto card on any transaction. And there's no privacy. The government basically gets a view of everything that happens and who the identities are behind everything. And literally the idea of a central bank digital currency to them is great, because then the government can actually know everything about every transaction everywhere all the time. And there's a record of it. So it's great. Now we can keep everyone safe, right? So that's a viewpoint that some Republicans share. And, there are people that say, well, the only reason that you would want to digitize any of this is to evade taxes or launder money. And there are people who are Republicans and Democrats that do that. Unfortunately, with Democrats in the majority, some of the key leaders on the Democratic side of the aisle share that viewpoint. So that makes it challenging to move legislation through their subcommittees. I've been really impressed with Maxine Waters coming along with her understanding, and she really was more engaged in those two FinTech Task Force committee hearings that we had, back in maybe September, October timeframe than I've seen her be on the issues. And so I think the key is to get people to actually understand the issues, and there will still be inherently that control versus decentralized. And I think as people understand how much more secure blockchain is as a computing network, the security protocols will win out. If you've got a central database, the system that the authoritarians, to make it party independent, one is the central authority controls everything, and the people that are more libertarian on the issue, Republicans and Democrats, say, well, look, you can look at things like Chainalysis and say, well, there's not true secrecy, but there is a layer of privacy. And because there's a true distributed ledger, you can follow all the things, and you can have at the endpoints still all your know your customer, Bank Secrecy Act protections that are essential. And you could comply with some of the goals, but you have to change the regulatory framework so that you can comply with them using the architecture that makes sense for where technology is. And if we don't provide that clarity, it's not fear. This is already what's happening. In the absence of the United States getting the legal framework right, all this great talent that's in America, all this innovation and tech hub that's centered in the United States of America is going offshore, not to avoid our laws, it's to find some laws that have created legislative clarity. And so you see the investment going to places like Singapore, like Switzerland, even Malta, places where they've passed laws where you can know how you're going to be treated, versus the SEC under Chairman Clayton. They've really worked to avoid providing any clarity. And my hope is that we can resolve that from executive action, like Brian Brooks at the Office of Comptroller of Currency, clear progress there. We could do the same maybe with the new chair of the SEC. And then Congress ultimately is the body that if we really want it to be different, we could pass a law, and hopefully we can build the momentum to get that done.
Yeah, I think that's all really true. And I do think that when there's this, the notion that the plate tectonics are moving, then people get afraid, and we have seen some flight. One of the things that, and I liken back to the early days of the web, and I think about what we didn't do very well on the content side of the web is engage regulators and really get involved in helping, not just to create legislation, because I think mostly we were afraid of it, but we also didn't explain it in a way that was user-friendly. And I feel like on our side, on the industry side, we could do that even more. And I did feel Representative Waters was moving forward in terms of thinking about the use cases and actually seeing active work being done. And I think the more we can do that, the better, the more movement we can see. But I also wonder, when you're talking about the notion of this, the flight risk and the US getting left behind, it's often framed as an economic one from a competitiveness, but do you get concerned about any kind of security implication, national security implications with respect to that?
Yeah, I think absolutely. So, one of the, and this is the core, people who want the central authority can only see how the system works today. And FinCEN is part of Treasury, the Financial Crimes Enforcement Network. If anybody doesn't know that exists, it's an agency within Treasury that when America wants to follow the money, that's basically the body of people that's tasked with following the money. And so when, whether that's for sanctions or whether it's for just tracking down criminals, we use this agency, FinCEN, to do it. You put a huge burden on banks in particular, but all money service businesses that have any kind of federal nexus, they're required under the Bank Secrecy Act or anti-money laundering provisions, know your customer requirements, to essentially spy on their customers and report suspicious activity to the government. And there was a pretty good article, maybe in September, that highlighted how the system is really already failing. And so some of these people say, well, the answer is to do more of the same things, more suspicious activity reports and more agencies and more reporting. And this is coming to fruition with legislation as we speak to basically make all small businesses report their beneficial ownership. And that was an undefined phrase initially, but it's at least now where any owner of 25% or more is going to have a new filing requirement with the government, with FinCEN. So it'll be every business in America that has to file this report every year or anytime there's a change in beneficial ownership. And frankly, every business will file it initially just to show that you're under whatever threshold they're looking for.
Yeah, there's a lot of that. So, go ahead.
That big reporting requirement is the idea. And so the question is, can we go and say there's a different way to do that? And what blockchain enables is a different way to structure the whole architecture, is to say that you can create a more secure network by saying, hey, there are going to be bad actors, but we're not going to collect this here. We're going to put it through in a different system. And you're going to have a more secure system, and you'll have a more auditable system than the current status quo. And so I think we could create that future. The Federal Reserve is studying it pretty diligently. And the real game changer has been the Federal Reserve essentially taking over the Faster Payments Initiative. They had initially said that they were going to leave that out there for the private sector. But now you see the Federal Reserve kind of working to take it over. And I think there really is a healthy debate going between how do they structure it. And half of the problem will be solved if they structure it with true blockchain.
So first of all, there's a Q&A link on the tab. Many of you have already submitted questions. I just want to make sure that those of you who didn't see it, you can ask the questions. I do have one from an audience member. His name is DeAndre, and he's actually from Ohio. He wants to know why there's such stigma that people who use crypto are using it for illegal transactions when they do it with fiat now. So why does crypto have such a terrible reputation for that? Do you think
part of it's political? I mean, the enemies of crypto are people that want to preserve the status quo. And so, unfortunately, when your enemy is defining you, you're usually not winning. When the internet was coming along, a lot of the incumbents didn't realize that this idea would be so transformative, right? I mean, some people thought it was all going to be a fad, right?
I remember.
Well, the banks are not in that boat. The banks, the people, you have very entrenched, very powerful incumbents who, frankly, their future depends upon them staying in some level of control of the system. And so they will use all the resources, network, lobbying, and influence that they can use to protect their status quo while they work to not be outmaneuvered and control it. And that's exactly what's going on. And a lot of it is willful deceit of my colleagues who don't know better in some cases, and of the American public. And the grain of truth is, yeah, there are illicit transactions with Bitcoin in particular, because it's the most useful, most effective, best use case overall. I mean, there's a reason the phrase Bitcoin versus shitcoin is out there.
Well, I think you actually coined that, didn't you? That was
I didn't coin it, but we did have a pretty good dial. I did introduce it into the congressional record, I think.
That's right.
But it really is at the heart is the crap is able to be manipulated by a central authority, and the things that are valued, clearly Bitcoin, isn't controlled by a central authority. So that's where it's trusted. And it was used, early days in Silk Road transactions and others. And so that's the, taint that's being painted on it. And I think that's also a part of why they've been able to avoid normally when you have problems, it's not hard to convince lawmakers or regulators to regulate things, right? To pass a law to reform it. But in the midst of all the problem, we don't have anybody willing yet to move legislation like the Token Taxonomy Act to a vote in the House. We've been putting pressure on Republicans and Democrats to get this done, and it just hasn't happened in the House or the Senate. Need a good Senate co-sponsor. I'm very encouraged by Senator Lumens from Wyoming. I think she'll potentially be the lead in the Senate for token taxonomy.
So there's been a lot going on in Wyoming just with respect to their local, the state regulation on blockchain. So I think that's a good bet for that. One of the things that I think that, I feel like if we continue, for example, bringing Stellar to more of your colleagues and talking more about what Stellar is already doing instead of actually the promise of what a decentralized network can do, yeah. I think it's going to be really helpful. I do think, though, that the Token Taxonomy Act, which we obviously support, would go a long way for regulatory clarity. So from the standpoint of, there's not a whole lot that industry can do with respect to getting it to a House vote on the floor, but what are some things that we can do to help the bill get across the finish line? Well,
just like you highlighted, making clear your use case. So you have people in the industry, get in front of your member of Congress, and particularly members of the Financial Services Committee in the House or in the Senate Banking Committee. If you can't get the actual member of Congress or senator to events, get their staff to the events. In the districts around the country, I told everybody, look, LA's got a hub. Invite Maxine Waters' staff to everything in LA. Steve Lynch is near MIT in Boston. Invite Steve Lynch and his staff to every single thing there. Because in my view, when you accurately understand the use cases in particular, there's so many good use cases, and it's like the tip of the iceberg, right? It's like the first few years of the internet, we clearly hadn't tapped all the use cases for it. And some of them, people knew, hey, it's, grocery store delivery is going to be a thing. Well, it wasn't ripe for a long time, but now it's a thing, right? And some of the things like that are going to be the case in blockchain, where there's going to be great ideas, they're not ripe yet, but there's going to be phenomenal transformative ideas that use this technology and architecture to create a much more secure way to do business. And as you tokenize any number of things, that token, whatever it represents, is going to be able to be applied to move money and transactions concurrently with less friction. And Stellar's a great use case of that in the payment system.
I do think it's fascinating when you think about your background and so where you came from, and then how you actually look at this as solving some of the problems that you actually encountered in your business. And maybe part of it for us in industry is to really focus on the backgrounds of other members and what they've actually encountered in their prior lives before they were actually policymakers, to really highlight that endpoint, that there are these pieces. Because when someone like you comes in and you've had this experience, it makes it a lot more concrete to be able to deliver to see the promise that this can deliver and actually then the actuality of what's happening. But maybe that's a little bit more of what we need to focus on too.
Yeah, it always helps, and it's really a relationship. So take the time to build the relationships with the staff. The meetings really do make a difference. And if you can't get, some people, unfortunately, it's a stereotype for a reason. There are a healthy number of people that you got to go back to never when they had private sector experience. So in their case, you can show how it's either making a difference for core constituencies in their district. What people are effective is say, look, here is this company in your industry, in your district or in your hometown, and they have this problem. Here's how this solves it for them. And if you can do that and have that person or say there's the CFO of a company in someone's district say, yeah, we're using this and man, it makes a difference. But it would be great if then that trusted source is a referral, just like anything with sales, the trusted source is a great, referral network's hard to beat.
And so I would love to hear you highlight what you think are the most important components of the Token Taxonomy Act, because I know that for you liken this back to what we did right in the early days of the web, of the internet, and let the light legislation. And so I think what you're trying to do is create clarity. So what are the two most important or three most important things that you think in the act that we should be focused on?
Well, the single most important thing to me is that you create a definition that says, if you do these things, then what you're creating is not a security. So if you think about the 2017, 2018, still to some level today, you had the initial coin offering kind of buzz. And there really were people that were essentially just trying to beat the regulatory system, and they were offering securities. And some of them were total junk securities, nothing more than fraud in a handful of cases. Those are the things that are held up as to, see all the problems with this. Well, those problems would go away if you made it clear, yeah, we want the SEC to go after the bad actors. We just want to leave the good actors alone so that they can communicate honestly with investors, employees, and customers, right? What are you buying? And then if it's clear that you've got a bright line test, then you don't have to worry about the SEC coming in and killing the business effectively. The Howey test is, a court case going back that really applied to orange groves. And to the SEC, everything looks like it, falls on it must be a security side of that test right now. So we do 4 things in it. We basically say if it's created, not promised, so it's not speculative, it already exists, then it's there. 2, it's on a distributed ledger, not controlled by, so you have a representation that's there and it's not controlled by a central authority. Then it's not something that one central authority can kill the value of it, for example. And then you can conduct transactions peer to peer. So you're not there's no central authority that has to okay, transactions. And then the 4th criteria is that it doesn't represent an entity. And as an example, I just use one of the Filecoin as a use case some people in the space would be familiar with. If Apple created a storage system when they were launching iCloud, then they called it CloudCoin. It would be very clear that you're not buying shares of Apple. You're buying storage, a commodity, and you're trading the value of that commodity and the right to the files with a token. So they actually have a subscription model. They just didn't tokenize it. So if they were to have tokenized it, this would be very clear you're not buying a security in there. And I think the other big thing that the Token Taxonomy Act does is it creates a custody standard. So you can, hand off custody, and you can know that, your financial institution can, be a clear custodian of the assets. That's key for individuals and for corporations who maybe want to use a treasury function. MicroStrategy famously, made a big treasury play this year. Turned out really great for their treasury. And then I think the last thing is a de minimis tax exemption that just complies with other currencies, which is when you move, let's say you're going to go to Europe, and you're going into London first, you're in pound sterling, and then you move to euros, and then you come back to the U.S. As long as that all nets out to less than $600, then there's no tax obligation. But you, of course, have to track it. And so that creates a complication. I'd love to have a different standard, but that applies existing law to the technology. And those are the three core components of the bill.
I think it's really important to look at this bill as essentially it just creates the clarity for innovation and for competition and for lots of growth in the industry, instead of actually putting a lot of regulatory control around it, which is what I think we harken back to the early days of the web, that's essentially what the government did then. It restricted itself from actually creating all of these regulations around how the web was going to develop. And when you think about a decentralized network, and particularly those that are focused on the permissionless and very similar to the web architecture, that's a public good. And very much in the same way that we are used to now thinking of the internet. When I was at Mozilla, we talked about it as it's not just a public good, it's a public right for us to have access. And so it's just an interesting, and that's what I think the Token Taxonomy Act is really trying to do.
Yeah, it basically says, look, no matter if you get it right, if we get the definition on security right, no matter how badly the SEC wants to come and deem you a security, if you meet this criteria, they can't. So then you can have certainty about your product. On the other side, if you can't meet that bar, well, then either change your product or your path to launching is through the SEC. So if you've got then hey, I can go through here, and frankly, it'll clear some of the backlog so the SEC can focus rightly on those use cases that really should stay within their jurisdiction. And while I would massively update any number of securities laws and make it way easier to raise capital, and frankly, I would basically end the accredited investor thing so that only the special people get early stage deals. I would love to end that. This doesn't do any of those things. It stays pretty minimal, and it's just neat that Congress did largely get it right on getting the internet, because the internet could have just as easily launched in France, but it didn't, because the United States got it right.
Okay, so I have two more questions from the audience. One is, what is your guesstimate on when we will see more clarity here?
Wow.
Crystal ball.
I was encouraged by the last two FinTech Task Force hearings.
Me too.
And frankly, I spent 3 years trying to get to that point in committee. So we'll see. If I felt really good about the work Brian Brooks has been doing at OCC, and I feel pretty good about the progress we've been making with key people inside Treasury and the SEC. Potentially, a lot of the executive branch is going to shuffle, right? It looks like that's way more likely than not, right? Mm-hmm. Yeah. At this point. So how fast that will change, and who are the key players and their views on this, they're pretty widely divergent, so as an example, if Janet Yellen is the Secretary of the Treasury, we'll see what her priorities are, but she, safe to say, has a different view than Brian Brooks does about the right way to regulate some of these things. So I think a lot is potentially not going to be settled until summer in terms of key people being in their new roles, and then where are they going to land on some issues. And unfortunately, while this area is so critically important for our country's future, right now, it doesn't rise to the most important issue. So, there are inherently inside Treasury going to be a lot of energy spent in the next few months on, what to do about our state of our economy related to COVID and the shutdowns and the impact on the macro economy. And so it may take quite a while before this really gets elevated to the right level to get the attention it needs.
Okay, and one final question. Will Ohio be the first state to send stimulus checks on Stellar's network? Yes, I am in Ohio. That is what's the first. I won't make you.
I don't get to do much with Ohio policy, but if I had it my way, we would close the gap with Wyoming and overtake Wyoming as the most crypto-friendly state. Wyoming's definitely outperformed the other states in providing the regulatory clarity. So I would guess that you're more likely to get the state of Wyoming to move some of these things. And who knows, I'll put in a good word with Treasurer Sprague on the logic. I can't really push for any one company, but we were the first state to accept crypto for payment of your taxes. And that was under the previous treasurer, Josh Mandel. Unfortunately, down the road, they found that he didn't actually have the authority to do that. So they've since revoked the ability to pay taxes in crypto. To me, that wouldn't be a good use of my Bitcoin. But some people,
right.
It's probably a better use than buying a pizza with it, right?
Well, thank you so much for your time. I'm honored to have had this conversation with you. I always find these discussions really engaging and helpful. We are here at the Stellar Development Foundation to support what we can, so let us know what we can do. Thank you for your time. Thank you for your attention to all of these issues, and grateful that you joined us today.
Yeah, thanks for inviting me. Thanks for spreading the awareness, and really, it's exciting to see what you're doing with Stellar. So, best of luck to you all and your whole team.
Awesome. Thanks so much, Congressman. Take care. Bye-bye.
Bye.
All right. Well, thank you, Danelle and Congressman Davidson. I agree that was a really interesting discussion on the likely road ahead for blockchain technology in the US, looking at it from a policy standpoint. And certainly it's great to have someone with such informed insights like Congressman Davidson as part of this community. So I'm feeling optimistic, but we would love to hear your thoughts and feedback, which you can share in the top right-hand corner of your screen in the feedback bar. And we are going to have a break right now, and we'll be coming back with our next panel discussion on reinventing remittances. So we'll see you then.
Hi folks, my name is Emily Donald and I'm the one and only recruiter here at SDF, which means I have the privilege of speaking with every candidate who applies for a job with us. I joined the team in June of this year, and despite not having had the opportunity to meet my colleagues in person yet, I feel very much a part of the team. Our culture is one of user focus, accountability, respect, tenacity, and camaraderie, which shines through in each of our interactions. I'm inspired by our mission of global financial inclusion and believe we have the right technology and team to bring it to fruition. I'm personally looking forward to expanding our team across departments in the coming year and seeing how SDF's strategy develops to meet the needs of the growing ecosystem. Thanks for joining us at Meridian. We're excited you're all here.
All right, welcome back, and it is quiz time once again. And this next one is a bit of a toughie, so good luck. The question for the quiz is, what was the root account seed before we had a network passphrase? Your options are, you can plan for a change in weather and time, all my life my heart has been searching, or nothing ventured, nothing gained. Good luck, and we'll be back in just a minute with the answer. All right, welcome back, Meridian. And if you took our last quiz, I've got the answer for you. The answer to what was the root seed account before the network had passphrase is, all my life, my heart has been searching. If you got that right, I certainly applaud you. And who knew the early SDF team was so poetic? I'm looking at you, Jed. So next, we're going to be turning to remittances. In 2019, the total value of global migrant remittances was $554 billion, supporting 800 million people. It's clear that access to remittances is critically important, but that the current infrastructure is still primarily cash dependent, slow, and expensive. So what happens when we see remittance companies apply some stellar innovation to this problem? We've got a great lineup of guests to talk about this, including leaders from Flutterwave, Tempo, and Parahub. And they're going to be sharing what they've been doing on Stellar and in the global remittance space. Boris Reznikov from SDF's business development team will be moderating the discussion. And Boris, I will now hand it off to you. Ooh.
All right, thank you everyone so much for joining us today to discuss the important topic of remittances, which of course is a big part of the economy and is near and dear to many of us in this industry. I'm thrilled to be joined today by three esteemed panelists. As Lisa mentioned, we have Omosalewa Adeyemi, who is head of expansion at Flutterwave. We have Surin Irian, Managing Director and CEO of Tempo Money Transfer, and Ian Ocampo, CEO of Parahub. And I'm Boris Reznikov, Director of Business Development here at the Stellar Development Foundation. We're super proud to have each of you as a valuable part of the community and as a part of the Stellar Network. I would love if each of you could briefly introduce your companies for those of us who may not be familiar with them. Would you mind kicking us off?
Sure thing, Boris. Good to see you, and thank you again for having Flutterwave represented. My name is Flutterwave. We are a payment technology company focusing on the African continent. Essentially, what we're doing is building one platform to support all types of digital payments on the African continent. Today, digital payments are highly fragmented in Africa. We have over 40 currencies, we have over 50 countries, and we, on average, have about 3 to 4 different payment types that are not operable across the different countries. So it becomes very challenging to transact or even send remittances within the continent. What we're doing at Flutterwave is putting all of those payment types on one platform so that it can be easier for businesses and individuals alike to interact with each and every one of those payment types.
Thank you very much. Surin?
Hi Boris, hi everybody. I'm Surin and I represent Tempo. I'm a managing partner of Tempo Money Transfer. So Tempo is a payment institution licensed in France, in European Union. We are providing money transfer services for individuals and B2B businesses. And we have covered more than 100 countries worldwide and sending money to all of the world and using different means of payments to be able to cover clients' needs.
Perfect. Thank you very much. And last but not least, Ian.
Yeah. Hi. Good morning, Boris. So our company name is actually PetNet. Our retail name is Parahub. Para in English is money. So it's actually a money hub, right? And we've been in the remittance industry for about 20 years now. And a large part of that, we were exclusive to Western Union. It's only this year that we became non-exclusive, and it's quite exciting for us to partner with Stellar and other remittance companies going forward, right? And apart from remittance, we also solicit loans. Well, PetNet is part of the Aboitiz group of companies and owned by Union Bank of the Philippines. So part of what we do also is we solicit loans for the bank, and we also do corporate and retail foreign exchange.
Excellent. Thank you very much. Again, thank all three of you for joining us today. So I'd like to bring our attention to the topic that is still on everybody's minds, which of course is coronavirus. I'd love to understand how COVID has affected each of your businesses. Ian, you process remittances in the Philippines, which of course is a traditionally cash-heavy economy. Are you seeing this cash heaviness changing? Is cash still king in the Philippines, despite the prevailing headwinds in the market right now?
Well, I would have to say for now, yes, cash is still king. But I think not just in the Philippines, but in many other countries, digital adoption is significantly on the rise. As seen in a lot of banking apps here, many of them have been waiving their charges for digital payments for bills. So technical adoption is definitely on the rise. Now for remittances, certainly the same is happening. We do have a mobile app, and especially in April and May, transactions have doubled, while majority of our transactions are still over the counter. We see digital transactions to be on the rise. It's a strategic initiative for us to grow this business and to support it and improve the experience and interface in our app.
Very interesting. Yeah, we've seen companies, of course, very interested in growing the digital rails, but we've also seen in certain circumstances and instances, governments and central banks making efforts to move people away from cash, whether temporarily or permanently, and towards digital for safety reasons during this time. Oh, do you have anything to add on this that you're seeing in the markets in which Flutterwave is active?
Yes, absolutely. So I mentioned earlier, our core market is in Africa, and we not only support remittances, we also support the acceptance of payments. So right around March, April, when a lot of economies or countries were beginning to issue stay-in-place orders, we also observed a lot of the regulators in the countries that we work with put in place, sometimes temporary, sometimes more permanent regulation in place to try to encourage the use of digital channels for transacting rather than cash. In Africa as well, cash is still king. I think we don't have exact numbers, but most definitely under 10% of all transactions on the continent are what have been migrated to digital platforms today. So it was really good to see the regulators step in and try to promote safety by implementing measures such as crashing or entirely removing transaction fees on digital transactions, just in an attempt to encourage the businesses and residents of their countries to focus more on digital transactions and build up the trend of digital transacting locally.
Very interesting. Thank you for that. Suren, I'd like to ask you, from where you sit in Paris, I'm sure the diaspora in the West has also been adversely affected, of course, by COVID. What are you seeing as the overall trends in remittances? Are people still able to have enough disposable income to send to their loved ones in the developing world?
Yeah, of course, it's Boris, it's very good questions because actually, yes, this COVID has quite negative impact on the remittance business, especially and worldwide, but especially from countries which are supporting remittance, where from people send money. And yes, because we are working not only in France, but in the whole European Union. Yes, we saw that when it was lockdown in Europe, actually everything was stopped. Of course, we saw online business was growing, but anyway, it wasn't like appropriate growth. I mean, compare with what was negative impact, because everything was closed, people wasn't able to earn their money to send. Of course, yes, there was a negative impact, but when it was open again before second lockdown, I will say we see that people still want to send money. Because as you know, Tempo use many channels to send money. Like it's online. There's also offline, like agent network, and we have our own stores. And in all those channels, we see that when it's lockdown let's stop, then people start to send money again, and it was growing. So I think it was a negative impact, of course, but now it comes back.
I'm happy to hear that. And I have a question to all three of you. We've seen many things shift during this time. Which of these changes do you think is temporary, and which do you think are here to stay?
I can go first, if I may. So I think regardless of COVID or not, there was a rise in switching from cash to digital. I think in some economies, it was exacerbated by COVID, of course. I think that that's a trend that's likely to continue post-COVID, if there is such a thing as a post-COVID era. I think that digital it makes things not only safer for us in this COVID era that we're in, but traditionally it's also helped crash the cost of remittances. So if you think about remittances from a brick and mortar perspective, where you have to develop agent networks both on the receiving side, on the sending side, you have to maintain physical infrastructure, and all of the costs for maintaining the different aspects of the remittance business eventually have to be factored into the cost of the remittance itself. You'll see, so I think traditionally remittances have been estimated to cost about 10% of the value that you're actually trying to send. But when you compare that to digital channels, you see costs drop as low as $1 or under $1, regardless of the amount that you're trying to send, right? And that's because with digital channels, you can sort of eliminate some of the larger costs that are associated with traditional remittance businesses. And that's the space within which Flutterwave operates. We support remittance companies who are looking to pay out into Africa, be it into bank accounts or be it into mobile wallets. So I think we've been seeing over the last 3 years where we've been supporting remittance companies, Tempo being one of the companies that we've worked with. In the last 3 years where we've been supporting remittance companies, we've most definitely seen an increase in the volumes that our remittance partners are sending into Africa. And we most definitely anticipate that volume will continue to grow.
Very interesting. So it sounds like there are, in fact, some positive externalities as a result of this. Ian, I'm curious from your perspective in the Philippines, which of these changes that you're seeing do you expect to be temporary, and which do you expect to see for a long time to come?
Well, similar to what Paul mentioned, I think digital remittances will be on the rise, and I think how we're preparing for that is we're building a digital remittance platform, whereas before, traditionally, what we would do is we would look for physical networks, but with this remittance platform, and as I mentioned earlier, right, this year I think we partnered with close to 10 remittance companies already, and what we'd like to do, and we're offering that in our traditional physical counters. So what we would like to do next year is to put that all in the platform, in digital platforms. And part of the exciting thing is to look for these digital ecosystems where we can connect with these ecosystems through our platforms and give them access to all these remittance services. So for us, that's very exciting.
Yeah, hopefully the shift to digital will result in, be a silver lining at the end of the day, in that it may ultimately reduce the cost of transfers for many of the people that rely on remittances for their day-to-day lives. I'd like to shift the focus now to the topic of interoperability in cross-border payments. Interoperability, of course, is something that we think a lot about here at the Stellar Development Foundation. But interestingly, interoperability can mean many different things to many different people, even within the cross-border payment space. So, for example, interoperability can refer to mobile money interfacing with traditional banking systems. It can refer to the interface of crypto networks with traditional banking systems. It can even refer to interoperability between two different crypto networks, or not even talking about crypto networks. It can refer to interoperability between digital wallets, which is not in place today either. And so I'd love to hear from the three of you, what does interoperability mean for your companies? In what way is it important? How do you strive to foster interoperability? And I'd be interested to know if that was one of the primary reasons why you decided to leverage the Stellar network to help process the cross-border payments that you do. So, would you like to kick us off?
Yes, sure thing. So for me, interoperability means my client not having to be concerned with how they're sending funds or where they're sending funds, right? So today in Africa, I mentioned earlier, we have over 300 payment types across all the countries. So as a remittance company who is looking to send payments into Africa, you're often burdened with having to understand the dynamics of every country and having to, beyond that, understand how the different payment systems interact with each other in those countries, if they interact with each other. So if there's a remittance company who's interested in sending payments into Tanzania, they have to reckon with sending payments into bank accounts across the country. They have to reckon with sending payments into mobile wallets into the country. Now, it sounds easy on the surface, but once you dig into the mobile wallet space, you'll find out they have 6 different operators in Tanzania that today aren't communicating with each other. So a traditional remittance company will potentially have to partner with each and every one of those 6 mobile wallet operators. That's time spent on partnership discussions. That's time spent on reviewing commercial structures, legal structures. That's time spent on technical integration with each and every one of these partners. That's time spent trying to understand how each of these domestic payment types work. Ultimately, for me, interoperability means taking that burden away from my client, the remittance company, such that they only have to be concerned with, I want to send money into Tanzania. This is the API that I use to send money into Tanzania, regardless of whether it's going to a bank account or whether it's going to wallet 1 or wallet 5, it really doesn't matter. So that's really what I'm focused on, particularly in my role of partnerships and expansion, making sure that Flutterwave can provide coverage for as many payment types across the countries where we have operations today, as well as making sure that we can continue to expand our payment type footprint to cover the other African countries where we don't currently have presence today.
Yeah, thank you. I think you bring up an interesting point, which may not be immediately obvious to the audience, which is that in order for a company to be able to service a large array of payment types, whether in collecting payments or paying them out, each of these integrations costs money, and ultimately this friction between the different networks means that the cost of integration is passed to the end consumer in many ways. So to the extent that we can work together to make systems more interoperable, I think the end consumer will benefit. Suren, I'm curious to hear in your role at Tempo, how do you think about interoperability in your business?
Well, actually, interoperability for us, it means the most important is clients. So it means what he needs. And because for any reason, the customer, our client, they need to send money smoothly, properly, and then to receive money as the way as it's convenient for them. So it means that taking it into acknowledge that sending money now, we are using a lot of payment means, and a lot of technology now we have, like especially we are talking about blockchain, stellar technology. So it means that we should be able, so there is like two types. The first, we should provide our clients, let's say, common for them service, and this means that we should have interoperability in all type of technologies which we use. So they come to our office, they come to our website, they take our mobile wallet, they use our online website, so they send money, that's all, and then they receive money. And what happens between this is I would say, more professional stuff, which we have to be able to provide in a high, let's say, high quality way, because the customer we don't need to, let's say, we can't put customer in the way when he thinks, guys, what happens? Why I just sent money, I can receive it, and how I can receive it, etc. So that's why for us using many type of technologies this is a part of interoperability. This is a most important part now, especially now because this is a transition period for all of us, because these traditional technologies, traditional payments, they start to pass through new technologies, and we face a lot of let's say things which we have to solve, including like regulation part, like some professional part, which is like making interact between different type of payment systems, payment technologies, and all of this we do just for one reason, that to allow our clients to receive money and send and receive money the way which is very common for them. So that's why in Tempo we start to develop e-wallet. As you know, we use stellar technology, very, very deep, and actually we decided to move forward. We decided to extend our license to be able to provide our clients a lot of payment means, a lot of services, to be able to give them, to attract them into our services, into our system. Because as you said, this COVID era, it shows that clients, the same like either clients or businesses, we have to be quite secure and be able to react on such type of cataclysm very fast and very quality. So that's why for us interoperability is like a heart of our business for this moment. It's a strategical question. That's why we try to make it for different solutions: mobile money, traditional banking system, crypto network, traditional system, so digital wallet. So this is about what we are working in Tempo, and I believe that we will do it in a good way.
Yeah, that makes sense. Making the customer happy, of course, people think immediately of a smooth interface, a nice app, omni-channel. But a lot of the complexity and the real innovation happens under the hood, which is how do you connect to different payment networks in a cost-efficient way so that you can still offer the customer a cost-efficient payment. Ian, I'd love to hear a little from your perspective in terms of what interoperability means at Parahub.
Yeah, well, I think O and Suren captured quite a lot of it, right? And for us, I think what interoperability simply means convenience. Convenience for PetNet and Stellar to integrate, and for our customers, as O mentioned, right? Multi-wallet. We have our own wallet, but we're cognizant of the fact that our customers may have multiple wallets. So connecting to those wallets must be done as well, right? When we partnered with you guys, I think a large part of why we were able to connect quickly is that we were quite ready from previous engagements. So I think that is that became a factor for us to partner with you and other brands in the future as well. So integrating via APIs remains our focus, so that it becomes simpler and easier for everybody.
Excellent, excellent. Thank you. You know, we spoke at the outset of the panel about the market as it stands today with you know, the circumstances that we're all dealing with. I'd like to now, as our final topic, shift our focus to the future and discuss briefly, how do you see the remittance market evolving in, say, the next 5 years? And so I'd like to start with Suren. You know, you operate in the Eurozone, which is, of course, primarily a sending market for remittances. Do you think that if you look 5 years into the future, will sending agents continue to play a role, or are you gearing up for a world where that is no longer important?
Yeah, it's Boris, it's really very good question, because it's what we see and what happened in the market now, and based how technology develops. And I see that in nearest 5 years, we will see that role of agents will decrease for sure, especially in Europe, in Eurozone, because here we use, as you know, we use so-called mom and pop shops, which are not professional players. Of course, they are part of community, and a lot of people come from community and come to this shop, use their services, and at the same time they sell money transfers. But as we see that, taking into account how technologies grows and what type of services money transfer players start to provide, especially I'm talking about outside like Tempo. So we see that I will say this way, we don't see a big role of agents in the future. I will say even in Tempo, we make decision just to close, let's say, agent network, because there is no needs, you know, because we need to provide our clients high quality service because of this new technology, because there's a lot of questions, and we have to keep our clients happy. So that's why. And also technology, you know, we use mobile wallets, we will launch mobile wallets and other solutions, other financial services, which wants, you know, more professional support, more professional service. So that's why I don't see that in the nearest 5 years in Europe, the role of agent will increase. It will decrease for sure.
Makes sense. And Ian, I'm curious, you know, given the innovation that we're seeing in the space right now, what is your prognosis for the cost of remittances overall as we move forward?
Well, if you look at the last 10 or even 15 years, right, for us, margins have steadily gotten thinner. And I think that's still going to continue, right? Like they say, sometimes it's a race to the bottom. So I think it's all about partnering with the right people so that we can get significant volume. And I'm very pleased. We are very pleased about this partnership we have with Stellar, because it allows us to explore direct relationships with other anchors that you have in other countries, which provides, I suppose, better margins going forward, right? So for us, that's really a great thing. For the customer, it will become more affordable. For us, it becomes improved margins, right? So while I see that margins will continue, or service fees will continue to decrease, partnerships like Stellar will make us continue to be relevant.
Excellent. Thank you very much. And as the final question that I have for you, O, before we switch to audience Q&A, is how do you see new entrants coming into the space? What do you think the competitive landscape will look like in remittances if you look out 5 or even 7, 10 years from now?
5, 10, 7 years from now, I think new entrants will focus more on digital channels, just because it's tough now for margins when you think about traditional remittances. And because digital has shown the capacity to crash the cost of remittances, I think a lot of players who enter the space will have to focus on digital if they want to remain in business and remain viable. That said, I think that they will need to explore some interesting business models, not just the fee-for-service model that we have in industry today that's quite prevalent. I know like a few companies have already started to pilot a zero transaction fee for remittances, and working on the back end with their partners to try to make up for revenues from a foreign exchange perspective. So I think we'll continue to see a lot of models like that, or even providing services that batch together the number of transactions as opposed to a per transaction fee. I think that's probably areas in which new remittance companies can look to enter the market. So mostly it's going to be like a business model innovation and less of a like a technology innovation, really, because the tech is in place in most places. It's just a matter of building a business model to support that technology and ensuring that the revenues or the income from said operations can continue to sustain any new entrants, especially because you have some pretty large incumbents from a traditional perspective and from a digital perspective.
Yeah, I think that makes perfect sense. I think the focus will indeed be on business model innovation.
Yeah. And final thought on that. So if you, at least in Africa, looking across a few governments who are, I think all governments recognize the importance of remittances to their countries, right? Like it's Africa being mostly a receiving region. Remittances contribute a whole deal to GDPs across countries. And a few governments have started to take note of that, and they're looking for ways to increase the amount of remittances that inflow into their country. So you have regulators stepping into place now and trying to work with the financial participants in their countries to guarantee zero cost remittances. So they're saying, go out there, find partners who can help us bring remittances into the country, offer them zero fees, so that they in turn can offer zero fees to their senders, and we can improve and increase the inflow of remittances. So there's a lot of opportunity in the next few years to continue to grow remittances across the board.
Super interesting. Off the top of your head, 5 years from now, or in 2025, what portion of remittances will be done over blockchain rails, percentage-wise?
Oh boy, I don't think I'm qualified to answer that question. I don't think I'm qualified to answer that question.
Nobody really knows, but what's your guess?
Of digital or of all remittances?
Let's say digital for now.
I think that we can probably look to about 40%. Going through blockchain rails as opposed to directly into a traditional payment type.
Ian and Suren, do you agree?
From my side, I will just add that the very important part of this is the regulation, because as a sending country, we see it in France, in European Union, it's very important when regulators and regulation in general, they will, let's say, they will accept finally blockchain, and if it happens, so then it means that it could be like 50% and more for sure.
Right. Ian, final thought?
Well, I suppose because it's on the rise, I would say maybe 20-30% in the next 5 years.
Got it. Okay. Well, that's definitely more than we see today. So let's all work together to bring the cost of remittances down for the end users. We're out of time. I'd like to thank you all very much for joining us today, and thank you for the audience as well.
Thank you very much.
Thanks for having us.
Thank you.
Well, I will extend an additional thank you to my colleague Boris, as well as Seren, O, and Ian. I love hearing about the various use cases the entrepreneurs on our network are implementing, and I'm very inspired by what these individuals are doing to truly reinvent remittances. Especially given the pandemic and effects of COVID-19, I think it's a critically important time for us to really be innovating in this space. As always, we would love to get your feedback on the session, which you can provide in the right-hand corner of your screen in that feedback bar. And coming up, we have a break right before our next session where we will be hearing from the incredible and inspiring executive chairman of Kiva, Julie Hanna. So go grab a coffee, tea, or whatever tickles your fancy, and meet me back here in just a minute for our next session. Thanks.
Stellar was created for currencies and payment. They understand exactly what market needs.
Harrier Integrated Systems is a fintech company that uses blockchain technology to enable cross-border payments. Tempo is a Stellar anchor, and that means they issue a token that represents euro currency. Cowrie, we issue a token that represents the Nigerian currency. And in our partnership with Tempo, we transact over the Stellar network where we trade these tokens.
Transaction time, which means speed, it takes less than 10 seconds, and we increased our business 5 times during 1 year.
We've seen 5 times growth in daily payments over the last year. Today, we send 500,000 euro per week from Nigeria to Europe.
All right, it's quiz time. And if you've been listening throughout yesterday and today, this one should be pretty easy for you. The question is, what role do anchors play on the Stellar network? First 2 correct answers win prizes. I'll be back in just a minute with the answer. All right, and we're back. So first things first, I've got the answer to the quiz for you. So what do anchors do on the Stellar network? They provide on and off ramps for value transfer between Stellar and external networks. Anchors, which are typically regulated financial institutions, provide access to the Stellar network for people and businesses all over the world. They do this by enabling the withdrawal and deposit of value onto Stellar, an incredibly important function and adds incredible value to the Stellar network. Well, this next session is a can't miss one. It's all about how entrepreneurs can solve our real world challenges, something that President Sirleaf mentioned earlier this morning. In this session, we'll hear from an inspiring voice, entrepreneur and tech pioneer, Julie Hanna. She's devoted her career to finding solutions focused on social good and purpose-driven profit. With a vision rooted in her own experiences, you'll hear how she has built tech to democratize systems. So enjoy this fireside chat with Julie Hanna, which will be moderated by Salim Ismail, who's the founder of Open Expo and Exo Networks. Thank you.
Folks, welcome to the Stellar Development Foundation, and thank you for this Meridian conference. I'm Salim Ismail. I'm here with Julie Hanna, and we're going to talk about her work in entrepreneurship and the future. Just for background, I was the head of innovation at Yahoo, running Brickhouse, their incubator. I helped build out Singularity University as the founding CEO, and then wrote a book called Exponential Organizations. I'm a huge passionate fan of crypto and specifically the development network and the work that you're doing at Stellar, which is stellar. So a wonderful name there. Julie, welcome. You're the executive chair at Kiva. You're the general venture partner at Obvious Ventures, and also you're a senior advisor to Google X. Give us a little bit about your background, especially your early years, to give context. And then I want to ask you a few questions.
Hi, Salim. It's great to be with you. Yeah, by way of background, I'm a technologist and an entrepreneur. I've been a part of a founding team or sole founder and CEO of 5 companies in the B2B and B2B space. Venture-backed companies, 2 have gone on to IPO and 2 were acquired. And I've parlayed that experience as an entrepreneur to continue to help drive innovations at a mass global scale. The thing the red thread that's run through all of my work really has to do with I came of age during the nascent days of network computing, and the thing that hit me kind of very strikingly was that the simple fact that people could connect person to person or peer to peer, that was revelatory, and I saw how that created an opportunity to refactor systems of hierarchy and put power into the hands of the many rather than the few. And with the internet, that was kind of taken to an exponential level. And so I came to believe that technology had the potential to be the most democratizing force in the history of humankind if we aim it toward that end. Its capacity to level the playing field on a mass global scale is unprecedented. And I cared about that because of my life journey. And so it's hard to talk about my work without also talking about my personal history. My journey brought me to the front lines of the tech revolution on the kind of the near eve of the internet. But my journey began on the front lines of war. And the dreams that were born out of my heritage as a Coptic Egyptian, as a survivor and refugee of war, as an American immigrant, they really were about creating a world that understands that while talent and dreams are universal, opportunity isn't. A world that understands that a cornerstone of justice and a pillar of dignity is fair access. I saw how my life changed, my early beginnings of not having access, and how that shaped my family's identity and our sense of possibility. And then I also saw how my life changed when I got unfair access in Silicon Valley. I was the same person, but the world treated me very differently based on the access that I got. And so to me, the access that we get is I think is defining on every level. And so that's my kind of definition of justice. I came to Silicon Valley 25 years ago with those dreams and a computer science degree. And I did believe that technology could enable that kind of fair access. I thought it could put a little bit of power into the hands of people who didn't have it, people like my family. And that was a future that I wanted to help create. And I began building products and companies that democratize access to information, to communication, and with Kiva, fair access to capital. And seeing how those products reached hundreds of millions of people globally, it's deepened my conviction that tech is a potent democratizing force, and that if we can unlock fair access to the advantages of technology and business for the many, not just the few, that we can uplift all of humanity.
And I think that's what gets a lot of people excited about cryptocurrencies and networks like Stellar as well. Talk a little bit about the work that you do at Kiva, because most of the audience probably understands Google Apps pretty well, but fewer people understand Kiva, and I think it's worth delving into for a few minutes the power of and what you've accomplished at Kiva, which is unbelievable.
Yeah, for those who aren't familiar with Kiva, Kiva invented the crowdfunding model 15 years ago. And our mission was to connect people through lending to reach small and micro business entrepreneurs who are underserved, most of who live in kind of the riskiest parts of the world. And that simple idea of crowdsourcing small amounts of money to reach entrepreneurs around the world has not only given way to kind of a burgeoning crowdfunding industry made up of thousands of companies, but in the case of Kiva, in that time, we have facilitated billions of dollars of crowdsourced loans that have reached millions of entrepreneurs. And this money flows, the loans and the repayments, across 190 countries. As we got to mass scale, what we found was, regardless of circumstance, when we were funding small and micro entrepreneurs, the repayment rate was very consistently 96 to 98%. And we had the big data to show that the world's unbanked and underbanked, the 3+ billion people, are actually very creditworthy. And when we saw that we were in a unique position to demonstrate that to the world, and actually we had institutional capital coming to us saying, well, you're crowdsourcing this money, you know how to reach people on the ground reliably, we've got large amounts of capital we want to put to work. And so we now have, in addition to the crowdfunding marketplace, we have Kiva Capital, which is essentially asset management to drive large amounts of institutional money into the hands of entrepreneurs on the ground. The last thing I'll talk about, which I think is the most relevant here, is we realized when we looked at how we were reaching people that essentially there were two things that stood in the way of billions of people being unbanked. And we looked and said there's 2 to 3 billion people unbanked, more underbanked, and yet there's trillions of dollars of idle capital sitting in bank vaults. When you look at it through the lens of technology, you say, hey, that's a distribution problem. And technology is very good at solving distribution problems. So when we looked at that and said, what would unlock this capital, we realized there were three things. One, verifiable identity. A bank had to be able to perform a KYC check. Second, credit history. And third, an aggregate view of the demand so that banks could move large amounts of capital. And we realized we were in a unique position because we'd been amassing identity and credit history information for a decade and a half for millions of people. And that if we could take that and put it on the blockchain and make that information secure, immutable, and visible, that would start to unlock the flow of capital. And not only would we begin to bring those in the informal economy into the formal economy, but we could actually unlock a massive green field market that's highly profitable. I would argue it's the world's largest market failure. The fact that we have nearly half of the world's population that are unbanked, and many of whom who don't have verifiable identities. So that's Kiva Protocol. We began to test that thesis by partnering with, initially with the president of Sierra Leone to roll out a nationwide platform, blockchain platform, to give people verifiable identity, get them banked. And in under a year, we managed to deploy this network in Sierra Leone. And at the launch of this last year, Nancy, an Ebola survivor, and a teacher who had been rejected by banks 6 times in attempting to open a bank account, walked on stage with President Bio, put her finger in to apply for a bank account, and within minutes had opened her first account. And now every Sierra Leonean, which is a big deal because Sierra Leone has 80% unbanked, all 5 million Sierra Leoneans now have access to verifiable identity in a way that's far more advanced than really any other part of the world. So that's a little bit about where we're at with Kiva Protocol. And the last thing I'll say about it is, because of the reach of technology and the potential of blockchain, we believe that we can create a financially inclusive world for all, for the many, not the few, and that we can do that in our lifetime. And that's become kind of our expanded mission.
In terms of the purpose that drives you, you're also very passionate about people building purpose-driven organizations.
Mm-hmm.
And talk about the purpose-driven profit aspect, because I've heard you talk about that in the past.
Yeah.
And by the way, President Obama named you a presidential ambassador for global entrepreneurship. And so this is a global effort that you're trying to do and roll out these things all over the world. And financial services only really works when it's global in nature. So there's a powerful connector there as well.
Yeah, it's, you know, there's some themes. I mean, I think because of my journey, when I ended up in Silicon Valley looking at, I was starting these companies and creating massive advantage for the region, for the Bay Area. And I kind of looked at it and said, I can keep doing that over and over again, but there's an asymmetry in knowledge and information around the model of entrepreneurship that Silicon Valley practices that's given us massive advantage in the region. How could I work to democratize access to that, to basically enable that kind of advantage to other parts of the country, other parts of the world? And I began traveling and essentially looking at how to export the Silicon Valley model of entrepreneurship. And that kind of converged in an interesting way with the work with Kiva, which is very much about global entrepreneurship. And around that time, and a number of years later, President Obama created this role out of his insight that the way that we celebrate and support entrepreneurship in the US may actually be our greatest export. And that if we could export this to other parts of the world, especially places where you have high youth unemployment, no jobs to go to, you could get to a place of economic stability. You could sort of feed that, and you can't have country stability without economic stability. So it became almost sort of a proactive path to peace and stabilization, and the role that entrepreneurship could play there. So that was the work with President Obama. I think the other insight that I had was that we tended to build technology and products for people in our world, in our own backyard, and then we would sort of scale it to the globe. But I began thinking about, well, again, you have asymmetry of access to these technology innovations. What if we took technology innovations that were being pioneered here and took them to the places where they were least likely to flow, places like Senegal and Sierra Leone? And I began looking at ways of doing that in places where that was happening to see how to accelerate that. And what I would say is that the advantages of technology and business are so profound that if we can essentially expand the access to those things, then you get this natural uplift because you start to create the same ecosystems of success that we take for granted here, the kind of the invisible scaffolding that upholds our lives. You start to kind of build that in other parts of the world. So I've been very passionate about that because I do believe that talent is universal. And we need, if you think about what the entrepreneurial instinct is, to me, what it means to be entrepreneurially minded, it's about this relentless pursuit of a better way, like wanting to create a future that you want to live in. Well, the more diverse voices and dreams we have at the table that are creating the future they want to live in, the more we get a future that represents all of us. And I think so that's become really essential to our future. When you look at, the fact that the number of us creating the future tended to sort of have a more homogeneous profiles, had meant that we have not created a technology future that represents us all. And now we've got a more awareness and consciousness about this. And we're starting to kind of move to diversify and address that. And I think this is a profoundly important inflection point for innovation.
On the ground in Sierra Leone, when you're implementing this new protocol and this, what are the biggest resistances you're seeing or the issues? Is it once the president or prime minister is okay, does it go pretty quickly, or do you get a backlash from the legacy institutions in that country?
One of the great ironies, I think the our cardinal rules in tech is you go bottom up, grassroots, and you disrupt the institutions kind of that way. And certainly Kiva's crowdfunding marketplace is about that. I sometimes call it the world's bank as opposed to the World Bank, which is top down. We're the world's bank, a bank that's for and by the people, that's, democratizing access to capital in a radically decentralized and crucially equitable way. And it's connected capital. So the counterintuitive wisdom here with working with Sierra Leone was that actually by partnering with the president, who had kind of a very progressive agenda for the country, we were able to get all of the banks and the financial institutions in the country to sort of orchestrate working with us at the same time. He turned to the central bank, to the other banks, and said, we partner with Kiva. So this was an unusual case where it actually became an accelerator to doing a nationwide implementation and deployment. So, we're in the process of partnering with other heads of state and other countries. And I think we're going to find out how much of that is a repeatable pattern, how much, a top-down approach in terms of go-to-market is an accelerator versus some of the complexities that you might expect to arise.
And are you optimistic about being able to take the Kiva protocol into multiple other countries very quickly?
Yeah, absolutely. Because, it begins with, right now, there's a growing awareness about the importance of identity. And so you have a number of countries that are looking at this. And especially if you look at, again, I think about this a lot because of my heritage as a refugee, but you look at the number of displaced people we have in the world today, it's exceeded what we had in World War II. I think we're at 60 million. I think we've entered an era of permanent displacement when you look at the effects of, climate change, countries being destabilized. And so the ability to walk across a national border and with your finger be able to prove you are who you are becomes actually quite crucial. And so because of that, what we've seen is there's definitely global interest. I spoke I addressed the UN General Assembly last year. It's the first time that the UN General Assembly had invited non-heads of state to address the assembly. And I spoke about the work with Kiva Protocol, and the response was quite overwhelming from countries all over the world.
So, this goes straight to the one of the commentaries. We've researched climate change quite a bit, and it's very likely that summer temperatures could hit 63 degrees Celsius in the Middle East, making the entire region unlivable. So forget the 2-3 million Syrian refugees. We could have tens of millions of refugees just from that before you even get to the Bangladesh and some of the other areas. How do you think about the impact of climate change around all of this? And specifically I'll also ask you to talk about the impact that you see with women-driven organizations, because that's a key part also. So let's start with climate change. How do you feel about that? And how do you think about applying this to and using this as a mechanism to have an impact on climate change? Because I've heard you talk about that.
Yeah, it's one of the, I'd say, unexpected and probably most profoundly happy surprises that we discovered with Kiva. And again, I think it speaks to the power of fair access, because if you think about what Kiva has enabled, you talked about mistrust in institutions. I'd say that Kiva is the largest human experiment in the dimension of trust. So you think about what is it that is driving people to lend to strangers, and why do they repay it? And so when you think about that and the equity of it, what's interesting is, in Silicon Valley, we talk about how women entrepreneurs, female, are way underfunded, like, shockingly so. And then you look at crowdfunding and crowd lending with Kiva, over 80% of our entrepreneurs are female or women. And they repay their loans. Not only do they repay their loans at a higher rate, but they reinvest 90% of their income in their families and in their communities. And so what you see is that these loans not only improve their lives, but improves their families' lives, their communities' lives, and ultimately plant the seeds that can change the fate of a village or a region. And so one of I mentioned this profoundly happy surprise. what we see is the first thing that women do when they get economic empowerment is they educate their daughters, they have fewer children, and empowerment of women and girls has been identified in the book Drawdown by Paul Hawkins as the #1 way to reverse climate change.
Yeah.
And for the simple reason, for those simple reasons that I mentioned. And so it's estimated that by 2050, that could actually result in a reduction of the world's population by 1 billion and over 119 gigatons of greenhouse gas emissions. So
Wow.
when you think about that, one of the interesting, I think, macro observations, we tend to think about social justice, poverty alleviation, empowerment in isolated ways. You look at the SDGs, and when we look at the number of SDGs that Kiva kind of moves the needle on, it's stunning, and including climate change. The harmony that essentially what is good for people is also good for the planet is something we've kind of almost compartmentalized in our minds. I mean, I would say that if you look at bringing in the advantages of technology and business and fair access to capital to all of humanity, which is overwhelmingly women that don't have access, and you bring humanity to the way that we do business, this has not only a profound impact in unlocking human potential, addressing social justice, but can move the needle on climate change. So that's how I think about it.
So this is fascinating because we can essentially take the financial inclusion model, show a direct line from the impact of that to the health of women, educated young girls, and how they operate, and a direct line to an impact on climate change, which is incredibly powerful and now becomes kind of mandatory, right? And for folks in the Stellar Network, obviously financial inclusion is absolutely core to the mission. And so this lines up incredibly well with that. Let's drill in just on one thing. I know this statistic about women, right? Mohammed Yunus also found the same thing out. If you lend to the women, they pay it back. Why?
Because it's what women do with the capital. So they are using it to educate their daughters. They're using it for health. They use it to fund businesses so they can support their families. And something about, and they are also the connective tissue of the community.
Yes,
so
very true.
They are very focused inward on the community, on the family. And so the loans are, no one takes a loan and then is done. It's like, kind of like, you know, even those of us who are banked, you know, it's rare that a human being takes one loan. So the loan becomes this enablement to qualify for larger loans at better interest rates. And so there's a motivation there to repay the loan. A lot of times they borrow together as a group so that if someone has, you know, a struggle with their crop and can't repay the loan, they cover. And so there's this group accountability. There's very much this kind of community aspect to it. And that tends to be the way that women naturally think, because they are this connective tissue of not only the family, but of the community.
One of the commentaries we make is that, you know, we use a set of very male archetypes to run the world today. Judeo-Christian religions, military-industrial complexes, the corporation, very hierarchical top-down command and control structures. And that's great when you have scarcity. When you meet abundance, the male archetype relates to abundance and as power and tries to hoard it, like Middle East oil or Wall Street money. And women tend to share it around. And that's the relationship to power and resources. And therefore, if you can educate and make the women sustainable, then everybody benefits very powerfully. So let's touch on an area that I know you're really passionate about. If networks like Stellar and the work that you're doing at Kiva actually result in financial inclusion, right? What does that do for humanity? Where do we end up, and what does that look like as a progression? We've seen that what happens on the capital side, as you've described it, we have an impact on climate change, et cetera. But what does that look like for everyday people if we have financial inclusion around the world?
Yeah, thank you for asking this. I mean, I've drawn great inspiration from Stellar as an organization, not only because of the technology innovation, but because of the intention behind it. and that kind of very sincere commitment to use the technology innovation and a frame of abundance to really kind of have a scale reach around that. And this is, I think, one of the more, I would say, enlightened ways to think about that. And I appreciate the way you frame the question, is that this isn't about those of us who are fortunate helping those of us who are less than fortunate over there. This is about a recognition that we are living in a globally interconnected digital village, and that what was only possible locally is now global, and what's global feels local. If you look at a picture of the internet, it's a reminder that we're all nodes on this organism. Yeah. Where and the butterfly effect is happening every day. One small action in one part of the world becomes has a world sweeping effect around the world. And so when you really internalize the notion of that kind of interconnectedness, you realize that every action that we make affects everyone. And so when we do something that benefits another, we are actually benefiting ourselves as well. And that's the real insight here. I mean, I'll just share some statistics. You look at women's hands do 66% of the work. They grow 50% of our food, but earn 10% of the income and own 1% of the world's land. So what would a world look like where there was more equity there and there was more equity in other parts of the world? The first thing that comes to mind is not only is that addressing a mass social justice issue, the kind of human potential that's unlocked when you bring billions of people online and you give them the kind of access that we take for granted. I mean, I think that this is, you talk about exponential organizations, the exponentiality of that, when you unlock that in billions of people, I think we haven't begun to see what human beings are capable of. And that to me is what I find so deeply inspiring about Stellar's commitment and the possibilities of what can happen when we democratize access.
And obviously, if you lift people off the bottom couple of layers of Maslow's hierarchy via financial inclusion and the work that you're doing and networks like Stellar are doing, then people can self-actualize and kind of really play full out. And now you have inclusion at every level, and you've empowered everybody in the world, which is incredibly inspiring.
Well, you said something when we were preparing for this that I think really captures it so beautifully is, we talk about bootstrapping startups a lot. And you said, like, what does this look like if people are getting this kind of access? And I was like, oh, humanity bootstraps itself out of scarcity into abundance. And that really captures it for me, because there's the objective definition of abundance, which is, do I have enough money? Do I have a place to live? Do I have enough food? But we also have a poverty of mind that we are wrestling with regardless of our circumstances, and moving from that scarcity mindset to an abundance mindset, I think is part of our journey, regardless of where we sit on the socioeconomic scale.
Very, very profound. And now if we can just apply that to the US, where my understanding is 40% of the population can't put $400 together in an emergency.
Yes.
We just need to bring it back. I'm super fascinated by the idea that we'll take some of these new technologies and build these networks in the developing world and then bring them back into our world at some point. So
can I say something about that?
Sure, go for it.
Yeah, this is actually a very important insight. Well, for one, we land in the US as well as, all over the world. And I think one of the things that people forget about the US, although we've had a nice kind of consciousness raising moment around COVID with this, is that it's estimated over 40 million Americans are unbanked.
Yeah.
Far more underbanked. You mentioned the statistics about not being able to handle unexpected expense. I think that's closer to 60% of Americans. And then you have, and then you've got kind of the number of people that are barely hanging on, who aren't even included in those numbers. So that need is very much in our own backyard.
And it's
the idea,
Go ahead.
Well, the idea of taking technology and going to overlooked to underserved markets and then going global scale with them. I mean, this is how every technology disruption has occurred. If you think about it, is the best way, the playbook, the innovator's dilemma is you go to an underserved, overlooked market, and then you build out your solution there, and then you kind of go mainstream from there. So I think that's also the potential that I see with the work that we're doing with Kiva, and why anybody who's doing something in blockchain or crypto, if you find an overlooked, underserved market, that tends to be a great place to drive an innovation.
On that note, let's wrap it up. Julie, Hanna, thank you for the comments and the incredibly inspiring work that you do. Thank you to the Stellar Development Foundation, and it's been great to be with you at the Meridian conference. We'll sign off and back to the conference. Thanks very much.
Thank you, Salim.
All right. Well, that was an incredible discussion and really an incredible honor to have Julie sharing her story with us at Meridian. I'm inspired by her drive to show that talent is everywhere, and it's really access and opportunity that makes the difference. I'm certainly feeling inspired, and I would love to hear how you're feeling. So please share your thoughts in that feedback bar on the top right-hand corner of your screen. We've got a break coming up, and then we'll get back to our next session, which is Life as an Anchor. We've been talking about anchors a lot during this conference, so it's time to really dig into the deep end and hear about their business and their story on Stellar. Stay tuned, we'll be right after this break.
I'm Alec. I'm a software engineer on the Nebula team, and I've been working at SDF for about 4 months. What I enjoy about SDF is we have people all over the globe, but we really are working as one team to solve one complex problem related to payments. One project in particular I'm excited about is the growth of our new dollar savings app, Vibrant. I think it can help a lot of people in countries where their inflation has grown to such extreme levels. Over the next year, I'm excited to see how the SDF network grows as we get more anchors, companies, people to join our network, and it grows in usage. Thank you.
All right, and we're back, and it's time to get into the nitty-gritty of how we bridge the world's financial systems with Stellar. Anchors, of course, are a critical piece in achieving this goal. So let's get into the details of what an anchor is, what they do, and the business opportunities that surround them. In this session, we'll hear from leaders from Bitbond, N-Tokens, and Cowrie Systems. Boris Reznikov is back to moderate this session. Boris, the floor, or shall I say the table, is yours.
All right, thank you very much, Lisa, and thank you, panelists, for joining us, and thank you for everyone at home who's listening. Anchors are a critical part of the Stellar ecosystem. We've talked about them a lot over the course of the conference. For anyone who is not familiar, just a quick reminder, anchors are the fiat on and off ramps that connect the Stellar network to global financial systems, and ultimately are the companies that make Stellar useful and accessible to millions of people around the world. And with that, I'm thrilled to be joined today by our three esteemed panelists. We have Tomas Tejeda, co-founder and CEO of N-Tokens. We have Jarek Nowotka, CTO of Bitbond. And we have Ladi Okrodudu, COO and co-founder of Cowrie Systems. And I'd love it if the three of you could please introduce your company briefly so that everybody knows what you are focused on, starting with Tomas, please.
Thank you, Boris. It's great to be here. I was last year in and SDF. It was great, and it's a pleasure to be here. Really an honor. Well, N-Tokens, as you know, we are looking forward to take more access to Brazilian markets and the general public elsewhere. We are doing that by B2B growing, meaning the idea is that we want to provide access to platforms that they can grow more volume and they can grow business within Brazil. The business we're looking for and working directly to build are remittance, cross-border payments, which will work with Satoshi Pay if inclusive. Remittance, we work with Tempo and at Stellar, of course. We do all tokenization business development, and that's important to build with D-Stock, for instance. And importantly, reach Brazilian fintechs. Brazilian fintechs, they are going through a process of open bank and a growing market for more digital services. And we believe that they can learn a lot from the technology of Stellar.
Excellent. We're thrilled to have you. Thank you very much, Tomas. Jarek, would you like to introduce Bitbond and the work you're doing?
Hi. Yes, sure. Thanks. Thanks for having us. So Bitbond started as a lending marketplace, and then, like 2 years ago, we've been extremely lucky because we got like the first formal approval for issuing STO on a German market, like fully regulated STO, and we did it. It was based on Stellar, and essentially. People started asking us, people and companies, like how did we manage to do that? So we decided to switch our business model. Instead of lending, we focused on tokenization services and essentially turning this one-off STO that we did for ourselves and seizing this opportunity to allow others to do the same. And we've been thinking, like, what kind of clients we should be working with, and we always wanted to make an impact, and we've been thinking that one of the particular segment of clients that were asking for tokenization services and was always interested in this were established financial institutions, particularly banks. that been experimenting with blockchains for quite a long time, but didn't have like much practical use cases. And what we brought to the table was a practical pipeline for securities tokenization. So since 2 years now, we are working with banks and building tokenization pipelines for them.
Excellent. Thank you very much. Ladi.
Hi, Boris. Thank you very much for having me. And hello to everybody. So yeah, we at Kawi, we are focused on cross-border B2B payments to and from the African continent, as well as within the African continent. This has been like a passion for us, and it's something we've been trying to solve for quite some time, a number of years. And luckily, a couple of years ago, we came across the Stellar network and found that this was the ideal platform for us to build our services. And that's where we are right now.
Excellent. Well, we're thrilled to have all three of you personally and all three of your companies as Stellar anchors as part of the community. I'm also thrilled to have such geographic representation here on this panel today, with ranging from N tokens in Brazil to Kawi Systems in Nigeria and Bitbond out of Germany. So we have quite a bit of representation there. I'd like to take a deep dive in this session, exploring what it's like to run a Stellar Anchor service from the insider's perspective. And I'd like to start by focusing on the business side of the equation, because ultimately that's typically what is the driving factor in making these decisions in the first place. And so perhaps we can start by exploring, what is the particular business opportunity that you're addressing, and even more specifically, what is the business opportunity that drove you to become a Stellar Anchor in the first place? Jarek, would you like to kick it off?
Hey, thanks. Sure. So just to clarify, like our position in the whole scheme of things, we are providing technology. So Bitbond is pretty much supporting our clients in becoming anchors themselves. And since we have quite vast knowledge, this is what I like to think, in blockchain and how the technology can be leveraged, we as well provide substantial consulting knowledge how things can be implemented. So when we've been discussing first projects with one of the banks that we are working with, they primarily, and this is like what every bank starts, like the first project that every bank starts thinking about, it's pretty much key management and custody solutions. And it makes perfect sense because this is like the foundation that allows you to provide further services on top of for your own clients. And the second sort of piece that we are providing and that comes naturally after setting up a custody, it's asset issuance. So for our clients, which are like serving corporate clients, this is a typical process that they are doing for many years now, but it's still paper-based. So essentially, digitalization of this process has tremendous impact on the performance of the whole issuance process. And obviously, these instruments that are being tokenized, these are like corporate bonds. Usually the face value is denominated in euro. So the next piece of the puzzle is stablecoin, like to go fully digital without essentially replacing the whole cycle. So what happens with these three elements, custody, asset issuance, and stablecoin, is that a client can come open an account in a bank, can issue an asset, and can receive payments and process the bond as well, like paying out coupon payments or dividends if these are like dividend paying assets through the stablecoin. So like fully digital process. So from a business perspective, I guess the main driving principle here is that essentially this is the future. And right now, when we have just starting to actually get experience in how these things actually work, and can touch this technology from a user perspective, you can already see that there's no coming back. And like the benefits of going full end-to-end digital, like with digital tokens and crypto in general, definitely are going to transform how the finance is done. And so obviously banks facing this choice, because their main value is the distribution, right? That they have all the clients that are keeping money in banks. This is essentially what their capital is. So once these digital offerings will start to roll out, and then the question is who will jump on the ship and serve their customers with new user experiences and more streamlined processes, and who will lag behind. So I think like from business side, this is really I don't want to say no-brainer, but essentially this is just a technological wave, and yeah.
Well, we also see this technological wave, and we're glad that you're helping your banking clients surf the wave, so to speak. It's also interesting to hear from you that it seems like your clients are using stablecoins and using the Stellar network not only for payment purposes, for example, but also to serve use cases that are more related to institutional asset issuance as well, and that it's a fairly versatile product offering that you're able to develop on their behalf. So thank you very much, Jarek. That's super interesting. Ladi, I would love to hear it from your perspective. What is the specific business case that you're addressing at Cowrie, and how are you using Cowrie as a Stellar anchor to help address it?
Okay, thank you very much, Bruce. So we have a major challenge here in Nigeria and the wider Africa as a whole, which is there's a very limited supply of Forex, and there's also limited access to global financial instruments. And for a country like Nigeria that does a lot of major importing, this means basically most of the transactions done are done on a cash payment basis. And because of the limited supply of Forex in the country, it's actually a challenge paying for goods and services internationally. Getting access to those to Forex in this country can be expensive, it can be slow. We saw this as an opportunity to offer a service where trying to make these payments is relatively painless. You don't have to search for Forex all over the place. And basically, we're using the Stellar network and our ability to on-ramp and off-ramp Naira onto the network to be able to partner with other anchors in other regions, Europe, for instance, where you can make payments for goods and services, basically. So we found it's a challenge that's if we can solve, we can prove to solve, will prove to be very successful business-wise. As in, there's a lot of demand for this service right now in Nigeria, especially with most of our Forex is gotten from oil. I think about 80% of our foreign earnings is from oil. And with the oil price and the post-COVID world that we're in right now, there is a demand for Forex outside of the government circles. And we are providing that over using the Stellar network and partnering with various anchors in various regions, basically.
Got it. Very interesting.
Yeah.
So it sounds like you are leveraging the Stellar network as a portal to facilitate payments both into and out of Nigeria, encompassing not only B2B, but also likely P2P payments as well.
Yes, exactly. Correct.
Great. Tomas, would love to hear from you in terms of what N-Tokens, what particular business case N-Tokens is addressing, and what led you to become an anchor on the Stellar network.
Well, the particular business case, and it's a bit of no-brainer as Bitbond was see, is friction. It's very hard to move money, especially cross-border. It's hard, it's expensive, it's slow, it's complicated. So there's unmet demand for digital services in payments in Brazil. And in order to do that, in some cases, it's more like in case of remittance, maybe it's the spread or just the cost of it. But in some cases, as an exporter for small exporters, it's simply impossible to do. And there's people that would be willing to export more, and they do not reach the market. We also have a big number of unbanked people in Brazil, with a gig economy in Brazil, which is very big and very relevant in terms of economic size and number of people involved. And they're simply not able to have a bank account or to be able to receive payment for their work. And in that term is very no-brainer. There's people willing to do business and there's no wait for them to do business. So if we provide means that it happens, in some case, we have to provide more efficient, as in remittance. But in other cases, it's simply providing the means for people to do business. Then there will be business where there are not. So we believe that whenever you make it possible for economic agents to start a new business, new relations, and make profit, it's a good business. Not exactly the same way you collect in different scenarios, but the business case, that's it. It's to remove friction from the market, and let it grow.
Yeah, that's very much aligned with the ethos of the Stellar network in general, which is to remove the friction that's inherent in cross-border payments. So we're happy that you're working on that with us. I'd like to focus for a second on business models behind being a Stellar anchor. Jarek, let me back up for a second. If you rewind a year ago, one of the main components of the business models behind stablecoin issuance was, of course, to earn interest on the monetary base. You fast forward to today, interest rates have crashed around the world to deal with the pandemic and the economic circumstances that it's created. Jarek, Bitbond works with banks in the Eurozone, in Germany in particular, where, of course, you're in a negative interest rate environment. How have you found that to impact the business case behind some of these stablecoin issuances and being an anchor in general?
Yeah, thanks for asking this question. So it's kind of interesting to see because you can see what happens, for example, with other stable coins that are issued on Ethereum. And most of them, like at least these are that are popular, are tied pegged to USD, and obviously the yield on DeFi protocols it's quite substantial. So it's easy, at least with if you accept USD exposure, to earn interest using crypto native protocols. And of course, for Euro, it's not the case because there is no equivalent in terms of a stable coin that could support this kind of use cases. So what we are hoping to see actually is how converting euro to digital assets before CBDCs happen can actually impact these all hungry investors for yield, like looking for yields. If euro-based stablecoin can actually make an impact and start to be visible on decentralized protocols. So obviously we are like reaching a bit away from several use cases, but what we hope as well is there are already some applications that integrate with Stellar quite well, like decentralized exchanges, and obviously euro stablecoin present on an exchange can be a part of this yield earning product.
Makes sense. So it sounds like you're looking for other venues to generate yield on this asset. Great. And I'd like to turn to both Ladi and Tomas and ask you how you've thought about the business model that you employ in your anchor service. Are you monetizing primarily on deposit withdrawal fees? Are you monetizing primarily on the spread in the Forex conversion? Or are you using a different type of business model to support this business? Ladi?
Thank you. For us, we are monetizing on the spread. Deposits and withdrawal fees are pretty negligible. So we just try and monetize on the spread, about 1%, nothing too crazy. But we believe that the volume will make it profitable at the end of the day.
Got it. So you want to make the barriers to entry as low as possible for users, and monetize on larger volume.
Sure. Yeah, exactly.
Tomas, would you agree, or do you see it differently?
No, I agree that in the business that Kari does, I think it's a great model to be able to be more fair. You take a spread, it's more transparent. In our case, we're not dealing directly with retail, so we are not putting spread, and also we are not working with, let's say, remittance with withdrawal fees. What they do is that we see, depending on each business and each platform that we partner with, how we add value, and we try to share this value so that it is transparent to the customer how much they are paying for the service it is being provided. And we don't add a cost for the customer that it doesn't see. So for us, it's more like, okay, are we reducing the spread in a remittance-based business? Okay, how much are we reducing the spread because it's more efficient? Okay, how can we share this spread that's this benefit for the client? Or in other cases, are we facilitating a business that are not there to begin with for a platform that is offering a service for a gig economy or for exporting? If you're offering a service that is not there and someone is charging for the service, we can obviously talk about commission sharing and something like that. But definitely, we're not having as a primary source of business revenue the interest rates on deposits. Maybe it's not feasible because of the current rates of interest rates around the world.
Mm-hmm. Yeah, we work with many different anchors around the world, and it's fascinating to us to see the different types of business models that are employed to serve the various use cases that the anchors address. Now that we've spoken a little bit about the business opportunities that you're addressing and what types of business models you're utilizing to make it a viable business, I'd like to spend some time focusing on a few specific areas that are part and parcel of running an anchor service. So, of course, there's the technical piece. How do you integrate onto the Stellar network? How do you integrate with the bank partner on the other end? How do you manage compliance? How do you manage shifting regulatory headwinds and tailwinds? How do you manage banking partners? And last but not least, how do you manage customer service as you start to ramp up your customer base? All of these things are extremely important and very different. And I'm interested to hear from the three of you which of these, or maybe another aspect that I haven't mentioned, has posed the greatest challenge? Which of these has been the most difficult for you to manage? Jarek, do you have thoughts on that?
Yeah, cool. Thanks for asking. I'm laughing because I just want to tell you an anecdote. So when we started approaching integration with a bank, anonymous bank, we've been faced with a challenge. Okay, so user is sending a euro transfer, like a SEPA transfer, and we need to get a simple notification, that the transfer has happened, and in response, issue stablecoin digital assets. So simple use case, in the age of APIs, like if you have Stripe or other services, it's super straightforward to process payments. However, no, not so much with SEPA. And the first solution was proposed solution was to set up a physical Windows machine sitting not even in a data center because it wasn't compliant, somewhere where we would remotely FTP to this machine and download a file of transactions like once a day or something like that, and then reconcile which transactions are new, which are old, and then try to guess basically which transfers has happened and which didn't. So fortunately, we streamlined the whole technical integration quite significantly. So this is, at least from our experience, when we are working with institutions that are really they've been forging compliance policies for years. And right now with new technology, most of these compliance requirements are pretty much obsolete. There's really a lot of work in changing the way of thinking about compliance and about from regulatory perspective. This is another topic that is just getting started, that regulators are actually catching up what is happening in the digital space. And we are fortunate in Germany that it's quite progressive, that digital assets are recognized already. However, that's not the case for other countries, and definitely there is tons of challenges there. So from technical perspective, because I'm mostly responsible for technical integrations in our products. Thankfully, with Stellar, it's pretty straightforward, but definitely the most difficulties and the most hurdles at the same time. The biggest opportunities are in compliance regulatory requirements.
Got it. So it sounds like compliance and regulatory, of course, are there even in progressive markets like Germany, but also dealing with perhaps legacy tech stacks at your banking partners can also present some challenges.
Absolutely.
Ladi, I'm curious to hear which of these factors has posed the greatest challenge to you. You as the COO of the company probably are the first in line to deal with some of these issues. Wondering, what has been one of the greatest challenges for you so far?
Yeah, thanks. For us, definitely compliance, regulatory and compliance. There are so many rules in different regions that we have to try and meet. We never thought it would be so difficult. We honestly thought once we figured out the technical aspects, we thought we could get up and running, but then we realized that the challenge of compliance, we really needed to get our heads around to figuring it out. So I would definitely say compliance has been the biggest hurdle for us to overcome. Luckily, we are actually overcoming it now that we've set our minds to it. So that would be our biggest challenge. Technical integrations has been quite smooth. Getting onto the Stellar network is pretty straightforward. And luckily, here, the banking environments, they're pretty, would I say, up to date with digitization. So that wasn't so much of as a challenge. So I would definitely say it was compliance has been the major hurdle for us to cross. But yeah, we're doing it right now. Yeah.
Got it. Well, it seems like you're doing it quite well. Tomas, curious to hear from your standpoint what has been top of your mind and how have you been dealing with it?
Well, starting with the easy part, let's say. It's not easy, but it goes very well, which is the technical part. And well, Jeff has a lot to do with being easy and being smooth. And Stellar is a great technology, helps a lot. It's very straightforward, even when you have to connect the different business partners. So this is very good. Of course, it's very important to be done very correctly, but it works well in general. Now, compliance wouldn't also, it's after regulatory part is solved, compliance quite comes in place. Still, the difficult part is the regulatory part. Because in my experience, what happens is that even when you have, and we have in the case of central bank in Brazil, a forward-looking and a changing regulatory to move to a more competitive and a more, not really decentralized, but a more digital and a more efficient ways to do things. Even then, it's just because of the nature of regulation shifts, it's hard to predict. It's hard to say, okay, there's a good view that regulation will be pro-business, still business in Brazil, whatever. Even then, if it happens in 6 months, is one thing. It happens in 2 years, is a completely different thing in business perspective. And regulatory-wise, this could be indifferent, like 6 months, 2 years. Maybe it's this process. It just takes because so this is part important. And also remember that we're talking about regulation in Brazil and elsewhere in general. Of course, when it's just fintechs in Brazil, is only in Brazil. But if we're talking about anything cross-border, it also involves how the regulation changes in other places. So is Europe changing the e-money license? Is UK setting new rules for stablecoins? And they are, by the way, all changing this. Is CBDC coming? And if it is, how do we integrate with CBDCs? And all those things are very hard for you to cope in the sense of, okay, we can talk about it, we can discuss the probabilities, but making a business on those things, that's the hard part. And remember that since we're doing B2B, part of what we do is we cover and try to remove the hurdles for our partners who do not know Brazil, sometimes who do not have the total insight of what's going on in Brazil. So we have to do that a bit with them and for them. So we have to also not take our only local perspective, but put ourselves in the perspective of the others that are looking at Brazil. So for all those reasons, regulation is the real game changer. And I think it's gonna keep changing. Technology is far from stopping to evolve. We see on Stellar, we see lots of protocols which will be a very good change. We see key recovery. That's a huge change. That's a huge benefit that everyone should enjoy. And this will have changes in the whole chain of products and services. And this is far from stopping now. And regulation, as Rob put, has to catch up. Even if the regulator is trying to catch up, when and how they do that, being incognito, this is the tough part. But
got it.
Now the others, we can deal with that.
Yep, that makes sense. So it sounds like the changing and dynamic nature of the global regulatory kaleidoscope is one of the things that you think about a lot in terms of how to manage both in your country as well as the countries of the partners that you're working with. I'm curious to hear from each of you, from a purely practical perspective, day to day, how do you allocate your time? What parts of the business that we've just touched on between technical, regulatory compliance, customer service, partner engagement, how do you allocate your time among these factors? Jarek?
Compliance most of the time.
That's
preparing infrastructure in preparing infrastructure in a compliant way. It's a big topic. Going to meetings with we are. In fact, I'm complaining a bit, but we are in a lucky situation because since we are working for banks, they are handling most of the heavy load, and we are simply listening what compliance has to say and just implementing this. We don't have to figure out things like how to build things in response to regulations. However, since we are dealing sort of in these both worlds, like from one side regulatory, dealing with regulatory requirements, and as well like managing things so they are like usable from user perspective. We are in a lucky position where we can actually influence the regulation as well. At least in Germany, it's very open, and I can say only good things about regulatory body catching up, and they're really listening to people who have practical experience with blockchain tech. So hopefully it will move forward quite quickly, and then we'll see other assets jumping on board as well, and then we will have even more work in integrating new kind of assets. But yes, wrapping up, it's mostly mostly preparing infrastructure in a compliant way, definitely.
Right. So if you're not thinking directly about compliance, then you're helping your banking clients, helping to enable them to meet the compliance requirements that they face in their markets.
Yeah.
Ladi, you mentioned previously that compliance is top of mind for you. Is that what you spend most of your time day to day looking at?
No, not really. My day is spent mainly managing our clients. Onboarding clients in a compliant way, managing current clients. There's a lot to do with rates. Rates fluctuate a lot in Nigeria. So there's a lot of communications about rates, status of their transactions, requesting KYC documents for clients who are onboarding, or just answering inquiries that customers mainly have, or trying to acquire new clients. So most of my days spent around client management. Luckily, we have a very competent technical team, so we never really have technical issues per se. So it's mainly about managing customers and developing business out, fleshing out newer services, and looking to the future, basically.
Got it. I'd love to explore this a little further. I think this is a really interesting point, which is there's two aspects that we strive to streamline here. One, of course, is the technical interoperability or the technical integration between two partners. That's something that the Stellar network directly seeks to streamline. So any one of the anchors we have represented here should, through the Stellar network, be able to seamlessly connect with the other from a tech perspective. Of course, today, there's still some bilateral agreements that need to be entered into on a business level between anchors. And Lottie, I'm curious from your perspective, do you foresee a future where both of these things are fully streamlined and almost completely automated? So not only the technical interface between anchors, but also on a business level? Do you see a world where this could be largely automated?
Yes, I do. I do believe it's not too far away. I would think there would be need for some sort of anchor verification program. Right now, it's easy to just come on to the network and be an anchor. So, but if there's a way of verifying anchors that are regulated in their regions, that have gone through all the necessary things that need to be done, yes, I think it's very, very possible, because the main friction between partnering with anchors is making sure you have the right anchor that can do what he says he can do, or they say they can do, and are regulated and are legal entities. So I do believe that with some sort of anchor verification program, it's very possible that that day will come.
Yeah, that's certainly something that we spend a lot of time thinking about. How can we make the lives of our anchor partners easier so they can better serve their own customers? Tomas, what do you spend most of your day thinking about?
Customer service, especially considering that we're servicing platforms and they always have to be on top of the best information. Do they have all the information they need to develop their business? Do they have all the inputs on the technical side and integrations that are going on? So it all starts there. For us, it has to be really top. And that's something that we can be more active on, so we can make sure there's no gap and they really are on top of everything. Now, on the regulatory side, that, as I said, it is very important, it's critical, but sometimes it's more a reactive part of my day, because it can happen that there's a public hearing on changes on FX rules in Brazil, but the public hearing is out. It won't be any change in the next few weeks, and then suddenly a bunch of new rules are out, because that's how the regulation resolves and issue new rules. So that is something that, when it comes, it's critical, but it's less programmable. It's something that it's not something that you can make your whole day around it, because it's not always like that. The technical part also involves around customer service. We're always trying to improve integration, the SAPs that everyone who deals with Stellar knows very well, but there are protocols that facilitate automating the conversation between business. And they help a lot in making compliance easier and making transaction information easier. So it's always good to be on top of new protocols and see how we can automate process of doing business. But this is something that, in part, there's some developments we do on our own, but usually it's something always integrating with the customers and that part. So mainly, it's always focusing on how can we make sure that the platforms that are using ours and their customers are having top service and have best possible service solution that it is. And from there, we can start looking at other things.
That makes perfect sense. Yeah, and that echoes a lot of the same thoughts that Lottie put forward as well. It's interesting to see the common threads between anchors in different parts of the world. I'd like to shift now to take a look at some of the questions that the audience has been asking. One of them actually coincides with a question that I had in mind to ask you as well, which is, in all three of your companies, either directly or indirectly through your clients, are representing fiat currency in a digital format. In some areas of the industry, this is known as a stablecoin. In others, it has different meanings. But in any case, I think most people would agree that we're at the inception stage of this. A lot of the action is between the banking system and the digital rails, the interaction and interface between those two systems. Ultimately, do you foresee a future where stable coins or digital representations of these fiat currencies are part of the economy to such an extent that the interface between the traditional banking system is no longer as necessary? And if so, what do you see as the future of traditional players in the financial infrastructure? Jarek?
Thanks. Yeah, so I guess we have a short time for stable coins before CBDCs come along, and they'll essentially serve this like universal national currencies purpose. But I think like the main role for banks in this developing digital tokens age is simply distribution. They have relations with clients. Probably it won't change that much. And essentially by providing digital services to their clients, they will just upgrade the whole experience. Of course, we have like the whole area of possibilities to unlock new types of financial instruments and new types of finance, like what we can see in DeFi, for example. It's happening already. So yeah, it's just a matter of on-ramp, I think, and stable coins as issued by banks is just one type of on-ramp, and everything ends up in digital form.
Yep, that makes sense. Ladi, how do you see the role of banks and the traditional financial system looking like in 3 to 5 years from now?
Yeah, similar to Jarek, I feel it's good. It's a channel. It's a distribution channel. I think they'll open up more to fintechs to offer services to their customers. I think I'm already seeing that in Nigeria. A lot of banks are open to having third-party services being offered to their customers. So I think they realize that there's an openness to technology that they can't really avoid. So I think they'll just end up playing in an open way.
Excellent. Tomas, curious to hear your thoughts as well.
Well, I think there's going to be some more differentiation on the service that are more vertical today, and we could see some decoupling of service. For instance, do necessarily payments are so concentrated on banks as they are today? I don't think it's necessarily the case, and I don't think it's a threat for banks. If fintechs can provide services that are more efficient to banks in terms of payments, for instance, there will be more business for banks to finance. So not necessarily as a threat. I think that the more efficient the market gets, and it will get as it gets more digital, the more business there will be in the whole. So let's say if you're talking about, okay, so half of the payment system services are provided by fintechs in a few years. The overall will be much more than double the current market. So business will have, banks will have lots to do, for instance. Now, to the question of CBDC, this is very complicated because it's unclear right now how CBDC would play along. Would CBDC be something like a synthetic stablecoin, but let's say regulated by central banks? Or would be something that banks can issue as they issue money in terms of fractional deposits? Or is it something more radical, like central banks would be accepting accounts straight from peer-to-peer or individuals? I don't think it's going to be likely the case. So the idea here is that even if there are CBDCs and banks are doing more services, and services of payments are provided by fintechs, there's much more layers of possibilities. And also, if you think of CBDCs, they cannot be servicing everyone everywhere. It's just like thinking that central banks are doing ATMs. It's not, ATMs are being done by private business, I think, everywhere. I would guess everywhere. So, and it's not something that central bank, no, I'm the only one who can print money, so I'm the only one distributing money. It's not like that. There's lots of
I'm sorry to interrupt, Tomas. We are out of time, but I really appreciate all three of you joining us today and sharing your insights and for ultimately connecting the Stellar Network to the global banking systems that you each represent. And we're really excited to see the cost-efficient financial services that you're able to offer the world as a result. Thank you very much.
Thank you.
Thank you, Boris.
Thank you.
Back again. And thank you again, Boris, and to all of the anchors that joined that discussion. Really interesting insights. I think we're really just at the beginning for what business models look like around anchors, but in my opinion, the future is incredibly promising. So, again, I would like to highlight that Stellar anchors are really something that differentiates the Stellar network from other chains. And quite honestly, our open anchor ecosystem is something that differentiates us from many global payment networks. So it's an incredibly valuable component of the Stellar ecosystem and something that I believe will power hundreds of fintech apps from all over the world in the not too distant future. If you want to learn more about anchors, you can do so by joining our Friday roundtable discussion. To join this discussion, you should go to the interactive sessions tabs and make sure that you sign up. Now, we've got another concert from the Amazing Roots, along with a quiz in our last session for today, Driving Diversity in FinTech. Stay tuned, we'll be back soon.